meeting. What was I about to do? Theme song. About to share my screen. Man, I'm watching us elevate. Man, I'm gonna talk after this.
Snipers HQ, where we calibrate the soul. Snipers HQ, where we calibrate the soul. Master the emotion, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Never looking back. Look at the market structure, identify the trend. Look at the market structure, identify the trend. Understanding where the move begins and how it's gonna end. Is it a bull flag or a bear flag in the flight? Cup and handles forming, we see it in the dim light. Head and shoulders pattern mapping out the chart trace. Snipers moving silent, finding rhythm in the space. Check the candle types, is it a hammer or a sign? Shooting handles forming, we read every single line. Volume gives conviction, that's the intent in the move. Volume shows the big money stepping in, getting in the groove. Watching how the candles close, watching how they retest, watching how they retest. Snipers taking every seat, big money stepping out of volumes in the room. We read the step in action, navigating through the gloom. We read the price action. We read the price action, navigating through the gloom. Ab is the indicator, spot on with the signal play. 5 and 10 SM averages, that's how he wins the day. Sniper like and discipline, his focus never fades out. Moving avaricious, crossing, clearing every single doubt. Talisha the professor, classes in, no ego, no pride. IT is the concept, hunting liquidity on the side. I'm a restellation. Talisha the professor, and no ego, no pride. ICT's the concept, hunt liquidity on the side. Fair value gaps, that's the space where we strike. Professors got the sword, doing what the masters like. Rams the mastermind, analyst of the whole trace. 20, 50, 200, 9 EMA in the space. RSI divergence, volume divergence, he spots it all. Stacks of confluence high, watching every giant fall. Snipers HQ, where we calibrate the soul. Snipers HQ, yeah, where we calibrate the soul. Snipers HQ, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Snipers HQ, stay focused.
Like I've been here, like trust me, no matter what she leaving that show with that shit. They go, her name, trust me, her ID is basically like y'all take my shit, y'all know who I am.
Fucking shit, Sheldon.
And she came up the line. No, first she the real.
Where's he at? Where's he at? Where's Sheldon at?
The website.
That
website.
we selling pre-owned stuff.
Peace and blessings. Gina, peace queen. Let's see who else. Levine, peace queen. iPad, peace and blessings. Oh, Levine, you got a twin? Lakia, peace queen. All right. Let's get started. We're on YouTube as well. If you don't want to be in the Zoom, head over to YouTube. Let's see. Everybody feeling good? Phenomenal, incredible, amazing, blessed and highly favored. Fabulous. I love that. Fabulous. Greetings. I've come in peace. Good. Same. Good. I like to reciprocate energy. Me too. Look here. You don't got nothing to worry about. Happy Friday, everyone. All right. How do I want to start off? So I think Talisha said she'll be back. Okay.
I'm here.
Rams is gonna take he probably should be getting on soon. All right, Talisha right there.
Yeah, I think we're both here.
Rams. Well, Rams gonna be in here, but as far as BTI, so don't think he's being rude. He's not. All right, so you want to start off with the, or I'll start off with the, what is it?
I can kick it off with the market overview.
Yeah. Boom.
All right. Can you all hear me okay?
Yes.
How is everyone doing? Thank you. Is that Nisi? I think I know Nisi's voice. Hope y'all are doing right. Perfect. I see you can hear me. Okay, good. So market overview, I want to make this a little bit interactive if we can. So I'm going to ask for your participation in chat. But what are you all sensing in the market right now? What are you seeing? Are we expanding? Are we reversing? Are we ranging? What are we doing right now? What do you see? Pulling back, okay. What's the sentiment feel like? I know Angie's not the only one that has been watching the market today. Fear right now. Okay, interesting. Okay. Fear personally, Levine, or just in the market sentiment? Market. Okay. Okay. Pat, bloody downtrend. Okay. Downtrend. Okay. Interesting. Slight downtrend. Okay. Dangerous. Lily, why do you say dangerous?
Can you hear me?
Yeah, I can hear you now.
Just not really confident on where it wants to go, so it just kind of has me froze. Like 1 minute it's up, 1 minute it's down, 1 minute it's trending, and I know those are the ways that it goes, but it just kind of makes you question, you know.
Absolutely.
It's really an upward trend, right? Because everything is making all-time highs. However, it's what is it taking to get to that next high, right? Are we getting to an area and staying there for a minute and then moving up? No, we're getting to an area and we're jerking back, and then we get back to that area and then we push up a little bit and then we come back and then we sit there and frustrating on it.
That's exactly right. That's exactly right. Any other? Let me see if I can pull you all can see my screen, right?
Yeah, girl, we can see that pretty chart.
She's even prettier when you're still in put.
I'm telling you.
Let me see if I can see the chat. Okay, there we go. So yeah, that's exactly right. And that's a sentiment that we're gonna kind of talk about and describe to the charts. But oftentimes, and you all will hear me say this a lot, we tend to get so technical, we just lose sight of the the sentiment of what's happening. And what you all described is exactly the sentiment we're seeing in the chart. Like, we're not in a downtrend yet. We are at all-time highs. we are pulling back and there's a lot of caution. And so how do we know there's a lot of caution right now? Well, a few things I like to look at to gauge that is, and Ab talks about this almost every week, but you kind of have like your trinity of the economy, right? You have your yields, you have your dollar, and then you have your bond rates as well. I don't have that up on here, so I'm going to pull in the VIX, right? And the way we start to think about what you're describing is by looking at these three things. So we can see on the VIX, we are spiking up. Not quite in fear yet, but there's certainly some caution around what's happening right now. Just yesterday, I think we were at like the lowest, close to the lowest point. The lowest of the year was about 1520. Let's see. The lowest of the year was 1528. So yeah, yesterday we were at the lowest we had been. Is this the lowest for the year? One second. The lowest for the year, here it is. No, the lowest for the year was 1440. And so we were, close to the lowest for the year. So people were, investors were backing off, feeling a little bit more calm. And you can see that spiked up today. Well, what happened today that would cause a change in how people's sentiment may be towards the market? You can put it in chat. What happened? What did we see today? What news came out? Jobs data. Thanks to Sean Lily. Yeah, exactly. Jobs data. And what happened with jobs data? Was it good or bad? Was it in the market news this morning? I'm not sure what you mean, Living. It was good. It was bad. Sean, why do you say bad?
Wasn't involved this morning.
It wasn't what? I'm sorry. You cut out.
I wasn't in the market or
You weren't in the news this morning. Gotcha. Okay, thank you. Sean, why is higher than expected? It was actually much
From what I
lower
was
than
seeing,
expected.
it was
Right? So when we look at that's where I'm going to go next, is Forex Factory, because that's just a great place to look at the news. So we can see, and I'm walking us through all this because as we've shared so many times, like the goal of us coming together is so that we can all learn how to be snipers, right? And not just have to rely on Ab or Rams or myself saying, here's what to do, here's what to look for, but so that we can all put the puzzle pieces together, right? And so that's why I'm walking through this a little bit slower, just so we can see how it all connects. So jobs came out. We had a forecast of 85,000 jobs. This is employment. So they anticipated there was going to be an increase of 85,000 additional jobs. And what happened was somebody said there's an increase of 172,000 jobs, almost double, more than double, right? Now, I'll reserve my personal opinion about where this 85K came from because I'm not sure that's accurate. But if you make a low enough estimate, things look good. But from what these numbers are, we did better than expected, right? So the forecast was an increase of 85,000 jobs. We actually increased 172,000 jobs. That's good in theory, right? That means more people, Angie lies. That means more people have jobs in theory, right? And so what happens is if you think about the market on a spectrum of, where's my market gauge? On a spectrum of big money, market makers, hedge funds, whatever you want to call them, but they're kind of on this spectrum trying to manage risk and reward, right? And so the stronger the economy is, in theory, the easier they can get less risky returns, right? Which is why when you see yields start to go up, so we have a positive employment number, good for the economy. Because we have some perceived stability in the economy, we see rates starting to go up, right? This is this green bar here, the daily rate, right? We spiked up a bit. Because rates are going up, the sentiment is that you can get 4.5% safely as opposed to putting your money in the equities market. So what are we seeing in the equities market? We're seeing a sell-off because money is shifting into, I mean, people are taking profit, yes, but from an economic perspective, we're seeing people are transitioning a bit to safer securities, safer investments. Think big money, think treasuries, think bonds, things like that, right? And so that's kind of the rotation we're seeing. And yes, that is an indication of fear in the equities market because people are wanting to go see safety. Now, when we think, and then the correlation with the dollar is as the economy is strengthening, people are like, oh, I can get a safe 4.55% as opposed to putting my money in the equities. I'm just going to go get this safe 4.5%. In order to do that, I need dollars. So then the dollar starts to increase because the demand for dollars is rising, right? So that's kind of the dots connecting on why we're talking about these things. When you hear Ab talking about the yields and talking about the dollar and talking about the rates and the carry trade and all those things, it all has to do with this balance of how strong the perception of our economy is and how what that balance looks like of risk to reward for big money, right? The other thing we're seeing, so taking that from an economic standpoint and transitioning to the market, we're seeing this spike up here, and there are now more companies above their 200-day moving average, right? We're seeing that increase. So what does that tell us? It tells us that we're seeing a little bit of a rotation in tech right now, but underlying that, there's the breadth is increasing, right? The number of companies that are strengthening is starting to increase, right? And so we're seeing this combination of a little, I keep saying perceived because I don't really believe it, but we're seeing a perceived stabilization of our economy. We're seeing the breadth of the market expansion growing. So people are getting a little bit more comfortable, but we're also seeing a lot of caution, which as you all noted, we're at all-time highs. People are cautious, right? They're cautiously looking for safer alternatives because we're at all-time highs. How much further are we going to go, right? When we translate that into SPY, we have to zoom out because when you see candles like this, I'm going to hide my drawings for a second. When you see, I'm going to hide everything for a second, actually. When you see candles like this, it can feel like we're in a downtrend, right? But this is where it's really important to zoom out and look at the overall trends. So let's go out to the weekly. We are still very much in an uptrend, right? This is barely a pullback, barely a pullback. Right? If we were looking at a true pullback, oh, that's okay. If we were looking at a true pullback of, let me see if I can hide some of this stuff. Okay. If we were looking at a true pullback from this last price leg, we're still going down to the low 700s, right? So this is barely a pullback. So the caution that I heard expressed earlier is absolutely right. You should be cautious up here. Read the chart, play the chart, but you should absolutely be cautious because we're not in a downtrend yet. We're still very much in a bullish trend, but there is a lot of reservation that we're seeing across the board. And we're seeing that because money is shifting from, and this is where I like to look at grams off the charts here, we're seeing that there's more of a balance between the Mag 7 and how they're outweighting and everything else, right? This is balancing out. In QQQ, there's more power, more weight right now on the gym floor than the heavyweights, right? There's a rotation out of tech out of the Mag 7 tech into other technology. We're seeing people still investing heavy in small caps, right? We're seeing the Dow pretty balanced, and this is on a weekly. We're seeing the S&P relatively balanced. So we're seeing market breadth growing, but we're certainly seeing a skepticism, a healthy skepticism in the emphasis of the Mag 7. So all that to say, the pulse that you all intuitively have on the market is right. It's accurate. Trust that, right? Yes, we're at all-time highs. Yes, we're still in a bull market. Yes, we're still running. We are having a healthy, slight pullback this week. But overall, trust the chart and follow the levels on the chart. I'm going to pause there for questions and comments to see if Ab or Rams have anything to add. And then if you all have questions in the chat before we look at some levels on SPY.
I just want to say shout out to the people on YouTube. Shanta, I don't want to butcher your name. Peace Queen. Jelly, Peace Queen. You're in. Oh, I thought I seen you in Zoom. Maybe not. Jarrett, Peace King. Darnell, Peace King. I mean, Peace Queen. My apologies. So they were answering as well. So I'm gonna try to look at their chat because they were saying Jarrett said distribution. They're shaking people who do not know their levels, which is true. Darnell said bearish. Yeah, distribution. They love their song. Hello, Ab. How are you and the family? Blessed, amazing, and thriving. Yeah, peace, Queen. Chantel, I see you.
I'm here. I'll add a couple things to that.
Appreciate it.
Ab, let me get share. Hold on.
It should be.
Oh,
it should be.
I got it. Yeah, I got it. But, all right. So I do want to point out a couple things. And also just to expand on the job numbers, it was so good that it's going to increase the rate hike talk now, because when the economy is hot like this and it's doing very, very well, this is what the Fed does. They have to increase the rates because everybody's making money, supposedly, right? So the revisions from last month and what came out today, it was so good that now you got to be careful, because that's why you're seeing the yields rise, because the economy is doing that good as far as employment. And now I do want to point this out. Something I was looking at earlier today in the morning. So
also Kevin Wash.
Just pay attention. Say that again, Ab.
Kevin Wash, we're dealing with a different kind of Feds. He's total opposite of Powell.
Facts. All right. So this is my RSI, right? I just expanded, and I'm gonna try to block out all my noise on the chart. Just look at the actual chart, but look at the RSI, okay? So now, if you notice, look at the RSI highs on QQQ, right? So you got about 80 here every time, and let me put the chart somewhere where you can kind of see. Look at this. Let's do this. Bang. Every time, right? The RSI goes, look where we at. We take a dump. Boom. It breathes, came all the way back. What happened? Bang. Blew up, right? Every time, every single time. Look where we at right now. Look where we at right now. Every time it happened. Look at the RSI here. When you see, boom. It looks little here, but if I zoom into that, that's a nice drop. Every time the RSI is this high, you take a nice dip. Every single time you reach this level, doesn't happen very often. So we have to be very nimble and selective. Like we've been saying for the last few weeks, it's not, the top is always like this. You always have to be very, very careful at all the tops. You can have absolutely a blow off top and you can take off. Cool. If you take off, that's fine. But like we always say, look where we at. Look what's happening here. You see the green? You see the green? You don't get that often. You don't get that often. So when it happens, you have to be very, very careful. So with the isolator, like an RSI is a momentum isolator, right? So once it reaches these levels, people psychologically, the chart reacts. The chart will react. So now look at this. This is nasty. This is nasty. This is on the daily here. So you want to be careful jumping into this stuff. I'm going to add to that. The careful part, you're going to have to be extra careful, because what IPO is about to come out that's going to shake the market? SpaceX. Once SpaceX comes out, the Metas, the Googles, where people are most concentrated in, everybody's going to want a piece of SpaceX. So you have to sell certain assets so you can buy the new equity. So now you're gonna have a little sell-off in other parts of the markets where people might be overextended in. They might have too many shares because when they risk, when you look at how much they've gained on all this AI run, now they could say, okay, we can just chop off this off the head and get a SpaceX. So be very careful if you're jumping in crazy plays at these highs and plays that could be in jeopardy of getting swapped for SpaceX. I will also add to the SpaceX thing. I saw in the news Fidelity came out. There's rules to the SpaceX. Why you can't see them? All right. So there's rules to the SpaceX, right? You can't just sell. If you sell the IPO, you're gonna get penalized. And then, like in Fidelity, the broker, they said if you sell the IPO within 90 days, you get penalized. You're not allowed to buy no more IPOs. So be careful. They're trapping people. This man is changing the whole IPO service, right? So if you buy the IPO, be sure to read the rules from your brokerage, because even Robinhood came out with rules for SpaceX and the IPO. It's some strings that Elon is pulling. Be very careful. This is a big time right now with this IPO. A lot of people have been waiting for this. Tesla might sell off so people can acquire SpaceX. So watch that IPO very close. And then near what, September, November, we got Anthropic, we got OpenAI. I think OpenAI is trying to rush before Anthropic, so they might be September. And then we have Anthropic, I think November. That's going to shake the markets. So everybody be very easy in the place that you're trying to chase already at all-time high, or that have far extended. By far extended is this simple. Let's look at give me a stock, something that's popular right now. DRAM, whatever you want to look at. SNDK,
Yeah.
MU, what's on the
Yeah,
chat?
pull up MU.
MU? Let's see. I know MU pulled back today. I think it was like 100. Okay, so
Yeah, it pulled back.
look at
pretty
that.
big.
And finally, okay, so this is still a good example for the 20-day. Look, at one point, we were here, right? Look how far extended we were. Even if I wanted to gauge where we were to my magnet. From the high, we printed this. Boom. That was the 9. 10% ahead, right? Just from the magnet. Then we were 23% extended from the 20-day. This is, when I say extended, this is a move that has ran away. You don't chase it. Here, if you see this extension from the average, 20 days in the market is about a month of trading. That is your average for that month. So if you're extended, right, from the average of your 20-day, you have to wait for a pullback. In this case, you can watch it, right? You can say, okay, MU came down 100 points, right?
Man,
Or about. Yes, sir.
repeat that. That was so good.
Which part? The whole
20.
thing?
The 20.
Yeah, so the 20 days in the market, when you take away all the weekends and everything, about 20 to 21 days is a month of trading. So this your 20-day is your 20-day average for that month. So if you're far extended, say you went, boom, you're gone. And now price is 23% away at this point where we were here. This is why I'm not counting this slope up right here, because this will bring me a little more up, right? I'll be at 20, but I'll be cheating myself on 3% because I didn't know that this happened yet. I would have been here at this all-time high checking, damn, should I get in on MU? But once I see I'm 23% extended away from my 20-day average for the month, I have to wait for a pullback. No matter what, guys, pullbacks always come. It can run. Let it run. Do you know how many plays I have on watch that I see, and then for whatever things of the world, I miss it? I don't chase it. If my entry came and went, hey, it is what it is. Now I gotta wait until I pull back. to one of the key averages, because at some point it starts to get extended. So now even in my magnet, you're just gone. Damn, I can't chase this move. But if this can come here, right here, sweep, whatever you want to do, and then continue, now I can trust the trade. This will be a shorter swing because I'm just following an immediate magnet, my 9 EMA. But if I am following my monthly average, which will be my 20-day, right? Some people use the 21, and you're not wrong. So if you're following your monthly average, and I am just getting so far extended, now I have to wait. See, now I'm in the zone. Okay, what are we gonna do? Grab from the imbalance here and possibly shoot, or just fill this daily gap right here, that if we go down the time frames, we'll see what that gap. See, now you leave a gap here, so now you got to see you're under the 9, you're under the 20-day average for the hourly, right? So now you're testing a 100-day here, but look how far extended you were from the 100 when the same extension from your 20-day was, right? Still 21%. You still needed this pullback. So that's what I mean when I say extended. That's what I mean about a move just running off. So just because it's by a key level now, that key level might not make too much sense if I'm too far extended from a key moving average. It might be a fake breakout now. Or it might reject on that ceiling now, because price needs to catch up. And then as we can see, MU here on the hourly loves that 100. Boom, look at this. Beautiful. And then can it happen again?
The red one's your 100?
Yeah, the red one's my 100.
Okay.
Oh, look at that. And I still don't trust it. But, I mean, as far as you can see, because this is going to be a ceiling no matter what. You got the 9 right here blocking you. So this can start, and you probably chop here. You're going to chop here. Probably grab a little bit more here and sweep this. Grab from here and decide if they want to come cover this. But you're probably going to chop around this 100, and it's going to make a decision. I wouldn't front run MU. I always like to be above my 9 before I start a decision, an entry decision, because once I'm getting above my key 9 on the time frame that I'm looking at, this is where now I already have my stop loss in play, because I'm already getting above the 9. So now I already know where the strength pushed from. See, like right here, you can say this, but I still wouldn't trust it because we just got there. So you can do this. Like, okay, well, I see bearish volume divergence. Okay, good. That's fine. But at the same time, it's still high, even though it's kind of losing a little, because you could be on the highway on a car, you could be doing 80 and let off the gas. You're still going fast. The car might, lose a little speed, but that car's still going just because you let off the gas. So they can very well still come here, and then they could just boom, 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 sweep right here, you get that 100, and then something could just blow. And then just keep, and then extend the move and wait for the 200 thing.
That was good.
So you got to be very careful with the reactions everywhere. So my reaction, a lot of times, I like to be getting on my 9. I see this 9 right now, it's slow, it's nasty. So what's going to possibly happen, the chop is we're going to try to come test the 9 at some point somewhere around here, and then we might reject, and then fight with the 100, and then we're going to start getting squeezed, and then possibly either squeeze down to come tap the 200 for a nice pullback and go. If not, we're going to fight here, and this divergence may very well play out after the chop. You're not just, I can't see us next week just coming to fill this gap. I don't see it. I still see some pain here. I do see some pain, at least for next week. That's what I got on that.
That was so good. Price can deviate from the moving averages, but eventually it has to come back to reality.
Yeah, that's really good.
Yep.
Really good.
That was good.
Shakola shouting you out, Talisha. Jared says, Sterling, look at the angle of that drop falling knife. So in the comments, though, with the 20, when I went back, when I told you to repeat that, because I wasn't the only one that agreed. Pat says that's fire. I haven't looked at it like that. gems. Angie said I never put that connection with the 20-day. That's good. So that
that was good. Word. I love when I bring clarity like that to you guys. Like those aha moments are the bread and butter of this. Like once you get those aha moments, it's like how Trap has said sometimes. Like once you see it, you can't unsee it. Once you learn how to ride a bike and you take them training wheels off, you don't need those. It's over with.
SMA or EMA?
Well, the 20 I personally use, I use the SMA, the simple moving average, because the simple moving averages, they play more as floors and ceilings, right? So they'll be respected more along those lines. The EMAs, they can wick down and break under because they're more of an immediate price action. So that's why I'm selective with the EMAs I use because it's my preference. So I only use the 9 for an immediate magnet, and we joke about it in the group, but I use the 400 and the 800 EMA because those are your deep discounts. So when you see a weekly approach you to a 400, watch it. If it breaks under, the 800 sitting possibly the next level or so down. You wait for the 800, you got a massive chance, risk and reward, right? Because you're on a weekly. That's one of my big time frames where I hunt. And if I see what I like on a weekly, now I'm interested.
Lily said, y'all been lying to us. Rams is AI for real. Fake ass laugh. Boy, you better try again. Let's do that laugh.
Right.
It's fake.
For real, I need some blood. I'm sorry.
Rams always does that. Rams low key just saying he don't like praise because every time y'all praise him, he does that fake laugh. Look at the shirt though, Rams.
I need that shirt and I need that hat.
Good.
I've been waiting since last year.
I like the
Dang.
fit.
My merch.
Not last year.
Yeah, he hit me up last year talking about KT. I got some merch for you. I'm seeing. I ain't seen that merch yet.
Damn.
I got you, KT though. Just see.
Rams,
Get 'em
go
on the
ahead
weekly
and
list, Scott.
recap. What's
You say
your
what?
moving average stack? You said
What I
400,
use?
800. What's your moving
I'll
average
show you.
stack?
I'll show you now. Like Virgil said earlier, I can show you better than I can tell you. So look, I use the ribbon, the MA ribbon, because the ribbon you can switch to whatever you want, whether you want EMA or SMA or whatever, right? So I put my 3 EMAs, I take off the 4th one that they give you, and I use the 9. Why is it okay? The 9, the 400, and my 800. So my
All
9, I just
EMA.
make it clear as
Okay.
day. Yeah. The 9, I like it white because I like my background all black. My canvas, I like it all black. I see the colors pop way better. So my 9, since it's my immediate eyes, is what I always look at first. Where am I? In any time frame that I'm looking at, I spot the 9 first. Where's price related to the 9? What is the volume looking like on my live candle? Those are the first 3 things I look at anytime I go into a chart. So this is what I use, and I dot these out. I dash this just so I know. I don't want to make it all solid. And then I dotted my 800, which is my deep discount, right? Because look, at one point, this thing came and tested these arrows. So you see right there? Oh, damn, I moved the level. Hold on. Damn, I need that level there. There. Okay, so look right here. Look, there's a perfect example. Look, that's the 800 EMA. Even if you would have said, yo, look, because look what happened last time it hit the 400, bang, and it went. It gave you a very nice run. That was what 364 or thereabouts, all the way up to. Let's not even count the whole top. Hold on, because I'm not greedy. So, like right before it topped out, 460. That's 100 points. And this is previous. This is in March. It just gave you the 100 points. Yeah, it pulled back. But the play from the 400 alone, if you wasn't greedy, you would have closed under that 9. You would have followed the recipe. You done. You would have hit a crazy, crazy leap right here. However many days that took, boom. You would have been gone as soon as you crossed under the 9. You would have seen that 20 the 9 crossed under the 20, that would have been another sign. You would have, yeah, I'm good. Because even when they pushed right here, you see this price right here, when they pushed, it still failed to get above my 2 main moving averages at this point in time. So you would have been good exiting this play. You 100 points. Crazy. And then look, that drop was vicious, but look what happened. You had a level right here, needs to hold or else, right? So it held, so we didn't find out or else, and it just went off the 800, the deep discount area on the hourly. So we're just catering to the time frame that we're on. So this is just the way these MAs work.
No, that's good. I mean, I know you and Ab are heavy on the MAs. I don't use them often, but I'm adding a couple here and there for Confluence. So it's always helpful to see how you and Ab both use them.
Yeah. So I literally just strictly use these. Those two MAs are strictly like, okay, we're getting to those do or die moments. Like this is where that big money is born, you know, and if it's not, then, you know, your invalidation thesis is break under and you can't reclaim quick, fast, in a hurry. I'm gone.
Yeah.
Because I'm under that 800. So if we break under that 800, then this can very well turn into a bear market. And this can hold like this for 2, 3 months, 4, 5. So once I'm under this, it's over with. Because I can catch this, right? I can be under the 200 and be in one of these key moving averages and say, I'm going to take the play. Because now I know I'm either going to try to reclaim my 400 if I put it at the 800, or I know I'm going to try to reclaim the 200. And if I reclaim the 200, I'm staying in the play.
Yeah.
Because I know there's a chance we're going to start looking bullish at one point or another. So I love these MAs. They're not used by many, and they don't, you got to wait sometimes for them to hit. Like, see, on a weekly, come on. Look, this was from the 400. It tapped down there, and it just went. It just went. And in the 40s, I mean, I've been trading long enough where I saw all of this. I saw MU at all these prices. MU was stuck between 72 and like 96 before it even broke 100 for I don't even know how many months. It was so annoying. So annoying. But it did it. And look, it's unbelievable. It's unbelievable what Micron has done as far as price goes. But look at this. It was just, and then what just took off. So now you got to wait. This is going to take a huge correction. Look at this. I mean, on the weekly, this is a nasty drop. I mean, even where price is now, this is a 20% drop still, just to hit, just to come like it did here, you see? And it came to check the magnet and then ran. Cool, that's good. That's good because we were already extended here. Price decided to start inching in. It did, reject it, and went. Right? Even here, over here, which we reclaim it. It was a false breakout under. They absorbed all of this right here, reclaimed the 9, took off. Came again, checked it again, took off. Now whoever's in this play, I mean, if you're willing for this drawdown, because I mean the gains were amazing. This is what you call that word stellar. That's stellar gains. And if you didn't get out any, I mean, me, I probably would have waited here and I would have got out somewhere here already. Somewhere here already. I'm not gonna lie to you. Like in this week, last week, because this year I would have accepted it. This is beautiful. But then the gains, the thing is the gains. Do you just stay in the play just because you want to keep milking the cow? Or do you respect the gains, right? Because at some point you have to respect your pockets. You have to respect your, all right, cool. I got in over here. I got in over here. Bro, I mean, 300, 400, 500, 600%. When is it enough?
Yeah.
Right?
We gotta work on teaching that, because like emphasizing that more, because I think a lot of folks just get I mean, some of it's ego, some of it's pride, you know, but just like wanting to see a big number and losing sight of like, I just like, this is a really good trade already, you know, don't risk it because you want to see X 100% return just for your own ego.
Right. And the thing is, look, you cash out, right? You put money in your pocket when you're
Yeah.
extended, when price is extended. This is selling into strength, right?
Good.
For one. Two, what you don't want to do is hold the play, right? Just to see if we respect this structure. Why are you going to suffer all that drawdown? If we hold, if the reaction to you is holding, absorption, volumes coming in, somebody stepping in right here, right when we're testing, you reposition because you got money to reposition. You already collected, right? And if it comes and retests this point of structure, no sense in staying in the play, even if you have time, right? Because I buy time. But even if I buy that insurance, okay, I don't need to use the insurance at the moment because I already I already got what I came for. So now I'll wait until we retest this structure. And if we can respect this structure, this is why I'll reposition.
Good.
Because now I can reposition with the money that I threw before and still keep them big profits. Because right here, you're willing to give away 42% of the price to that MA. And then that amount in your option play is a lot of your profit.
That's substantial. Yeah. That's a lot.
And
It's
I mean,
not
almost
one for
break
one.
even. Right, almost break even because depending where your theta is sitting now and where you got in here, because you could have very well got in here.
Yep. And what catalyst is around it? Because that could spike your IV one way or the other, and you'd be out.
Yeah.
You know.
Yeah.
That's good. That's really good. Yeah, I've been adding the moving averages a little bit more. I do like them. They tend to align with the fair value gap, which is really nice. And I do love just for long term the 200 weekly EMA. Like that's golden for.
I want to know who was it, Angie or Ash, that got in this? That she was still in it, got back into profit. I want to know what she did with this.
It was Angie.
It was Angie, right? Is she here? Angie, what did you do? What did you end up doing? You still have it?
I still got it.
Okay, well, so but right now is not the time to sell. You might. I don't know. Are you red now?
I'm sure I am. I'm ready for everything right now.
Okay,
but hold on, let me look.
because this 92 level is big. This is big here.
Okay.
This is the retest of the flag, and this is big, like big level. If you lose this, where am I on the weekly? Okay, if you lose this, look, it's not looking too good. Now, if you lose this, I don't. You gotta think about the SpaceX, right? Think about the SpaceX and see. So right here, this is key. You cannot lose. You lose this, take the drawdown. Like just take how much time do you have?
Hold on. I can tell you exactly. Where are you at? Current please.
Wait, is this today?
This is today. This is today, bro. Like this thing crumbled today.
Did it hit 130?
November?
No, 122.
Yeah, it went, right? It went. When was this? Yeah, so it went that day, right? And then now this was today. I saw it earlier when I was working, and I was like, oh my God. And I didn't have a chance to jump on Discord today, so I'm like, oh my God, what did she do with this? Because I was looking at it, and this is, a lot of people are looking at this level. This right here, this is do or die. It's either you're going to respect this and go, or you're going to break this, and now you got $68, $69, $70.
You're still in?
Yeah.
She's still in.
I'm still.
That's coming to 78.
It's down 45%.
I would, Andrea, if it loses 90, I would get out.
Yeah. And look, losing 90 is losing that 20-day. That's already sloping down on the week. Now, look, the only thing I do give it is this step in here, but it's coming here because the thing is, they might want to reload. They'll bring it down here, and they will reload it.
Look at that. Look at the pattern. That's a bearish pattern right there. Damn. Yes.
Well, look, that's on the weekly, in between the three candles, and this is on a weekly base. Like, this is a nasty rejection here for the week. So you really, really, damn, man. I was thinking about it earlier too.
I play those patterns right there. That's straight bearish. Damn. I thought it was coming to 130, 120. You should have moved your stops up far up with the weekly low. Yeah, last week's low. Should have. Damn.
Look, I will follow what Ab just said too. Like you lose 90, get out. Like don't even think about it. Don't
Yeah,
think about
Yeah,
it. Like
gotcha.
just leave it be and you'll reposition. You'll make that money back. I don't know how deep you went into play too. So, but keep that
That's
one to
cool. I
yourself.
went like,
Yeah, yeah. Okay, good,
this
good.
was her
Because that
runner.
you went light, huh?
This was her runner.
Yeah. Oh, that's right. Okay, good, 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 good. Good. That's not good, but better.
Put a stop
no,
loss
yeah,
on your runner next time.
190.
It's
Yeah.
amazing play though. No, next time
Yeah.
you a trail and stop on your runners.
Hey, so there's still
Ah,
time before earnings, and I mean,
Wait,
look at this. Like this. Look at these earnings. Like, look at this.
when is
Is this
earnings?
the one we just looked at on Wednesday?
Yeah,
ASTS. Yeah.
yeah, that's it.
But we looked at it somewhere, boom, and it bounced.
It's
Yeah, it was
It
because it was
bounced.
over 100 on Wednesday, wasn't it?
yeah, but
Yeah, it went up to like 115.
Yeah.
the whole space sector
Yeah, yeah,
lost
yeah.
2 days ago.
It's that SpaceX thing
Yeah,
right now.
2 days ago they got smoked. SpaceX lost like
hmm
1 point something billion in one day, and they didn't even launch yet.
Wow, Meta just got smoked today.
Everything
Wow,
got
look at
smoked.
this. Look at this. Look at this. Look at this. Wow, I didn't even notice that
Oh
because
my
earlier I was
gosh.
looking at Meta and it was over 630.
Sonny
Look,
better not
oh
be
damn.
I
on.
can't wait.
This is the
This
second
is
Look
time.
at this. Price is at
my bear heart
586.
is so happy right now.
I had 500
40
on Meta
points.
months ago.
Yeah, that's coming to
Yeah.
retest that 200 day. Damn, that's far
480
down. No
exactly.
way. Oh my
Lovely.
God.
That's
Wow,
Ab,
look
you
at it
see
right there. I
520 on
mean,
Meta?
huh?
You see
I do
520
see
on Meta?
520. Yeah, yeah,
Okay, good. Same.
yeah, yeah.
Ab,
And
you
now
sold
look at this. I
520 too,
mean,
didn't you?
I don't know.
yeah, a while back we did a video on Meta a while back and it hit beautiful. But look, this is you see it right here. Let me see if this might be bright enough. So you
Buys
got
at
your high,
740.
I
failure
believe
to go
that
higher,
I even seen 300 and something.
lower high, lower high, lower high, lower high. I mean, come on, that is crazy. Damn, Meta. Wow, too much capex spending.
Smoke.
They really getting punished. Yeah, yeah. So look at this. It's 490. This 490 floor right here, and between 526 and 490, I'll be interested.
Ooh.
I'll start being interested
Yeah.
for something possible with Meta.
My target for Meta is
442 looks
480.
good.
And if it loses 480, I got 338.
Ooh. Let me see where it's 338 fall at.
You'll
Okay,
see why.
right here. Let me
Meta
see.
is a good stock to tell you when the market is about to drop. You'll notice it all the time. In every all the recessions, like COVID and stuff, it's the first stock that takes the crash a lot of the times. One of the first, I'll say.
You said 338, right?
Yeah.
Yeah, that gets me at a really good fib level on this last leg up.
Oh
On
wow,
the,
I
I'm
already
looking
see.
at the
I
monthly.
already see.
It's a high
Okay,
chance that it hits
I
338.
already see.
It was
Yeah.
definitely too. Really high.
Ooh, I can't wait.
Wow. That I mean, yeah. I'll definitely this level here. You got to.
Let me see what.
Shares, leaps, all of it. But wow.
It's an
Okay, I'm gonna
opportunity.
leave that just like that. I'm gonna do this. I'm gonna put an alarm right here at that 400.
Hey,
That'll be
Rance,
at
what do you
388.
think
Yeah.
about the 9 and the 20 crossing?
On Meta right now?
No, I'm just saying in general. You would take.
Oh, that's a big sign. That's always a good sign, whether up or down. That's always a big sign. As long as they're not wrapping around, when you see them just like wrapping around and not really taking shape to one side or the other, if they're doing this, right? Like I knew the drawing was gonna be dumb. If they're doing this, that's chop. The stock is just gonna chop, right? But if you start seeing the slope and then you see that 9 come, like that is like, all right, cool. Or if you gotta wait when you start seeing them, I don't let one of them, like if the 9 gets above your 20 and it starts flipping under again and you lose the 20, now you're in for chop. So you got to wait to see if the move is going to stay going to that direction or if they're just going to keep like snaking each other around. So that'll just be chop. Like you see, like even if this 100 stays right here, this 50 stays right here, the 9, and it just comes back up next week and it just chops, tries to get all this liquidity right here from all this, right here, boom, and then comes down again and eats all this. So now you just chopping between the MAs. So then now you'll have to probably look at the 50, right? Because once you're chopping between the 9 and the 20, you look at the 50. That's what I do. Did I end up showing you my I think we blew over that. Hold on. So this is what I use as far as my SMA lineup. Don't worry about why this is not in like order. It's just the color preference that I do because my 20 got to be green, right? So my 10 I do it blue.
You got to zoom in to what I'm looking at. You
see this? Hold on, I'll tell you right now. My SMA lineup. This is what I use as far as the SMAs because I know I showed the EMAs. So this is the SMAs I use. So and I pay attention like my stars. That's what I pay most attention to, but I am always considering what they're doing. You
went in and out.
I went in and out. You didn't see what I said? Okay, so I'm always these are the okay, I got you. So my most important ones are the 20, right? As far as my SMAs, the 50, right? And then the 200. And then I pay attention, right, to the 100. I pay attention to it because that is my key decision point whether we're gonna test that 200 day or if we can just have an immediate reversal back to the upside, reclaim my 50 or my 20 and 9, and we can just take off from there because we don't always have to come and retest the 200 right away. The 200 can spend some time. It's 200 average, so that can spend some time away. Even on the daily, it's 200 days worth of average price. So I do always pay attention. But now the 10, I do a little bit less because I follow my 9, right? And my 9 and my 20 are my most important. Those are my most immediate. That's what I look at first and foremost is always the 20 and my 9 EMA. So that's a very crucial, like as far as the crosses, pay attention to them. But what I will say about the crosses is this. I used to do crosses a lot, but I'm kidding. So what I then notice is the crosses lag a little bit. So you wanna have the confluence. The cross is your confluence. It's just stacking to your conviction, right? Because look where it crossed here, right? Look where it crossed here, but you had a high here, failure to go higher, lower high. You could have got in here, boom. But you wait, you get me? But then you would have got in. I'm under the 9 MA and everything, and now I could say, all right, well, I got my stop loss here because I got in here. I got in here. I got my stop loss here because look, when it went under, it tried to reclaim and it didn't. It closed green, but it didn't reclaim the 9 and the 20 at the same time. So then you wait for the cross. You could be late. You might be just in time, but the cross will always lag just a little behind your analysis. Like you could always see the trend. You could see which way we're going. You could already see the sentiment. The cross, I like to play the crosses as like okay, that's confirmation. Like, okay, we're good. If I'm in a trade, I don't have to rush out the trade at the moment. But the 9 and the 20, very, very important. Now, following the trade just because of the cross, add a little bit more confluence to it, and I wouldn't be opposed to it. But don't only just follow the cross, because the cross can very well just fake you out and go. If you're not quick enough as well. Because a lot of people, they see this and they think continuation right away. But when the lower high is forming, this lower high here scares you. So you get out to play either in red or massive profits you give back. So the cross could get you late, and then you're trying to enjoy your profits, and then it just reverses because it's still in structure. You got your high, lower high, making a new lower high, right? And then boom, to drop. Now here, this is a fake, right? So, okay, can we be changing character? Boom, no. Fake out, now we drop. What are we gonna do here? We're gonna chop, or we're just gonna break. See, we're already, I know it's hard to see with all my stuff everywhere, but look, the red, see the red? So now we try to reclaim it, rejected. This right here ran again, that this was at some point, this was gone. This was around this price today. So all of this happened just today, which is crazy. That is crazy. So now look, you just took that low, came all the way down, took that low. If this doesn't just go, this is prime for lower. It's prime for lower. And the fact that, I mean, who unloaded this amount? Who are we getting ready for? SpaceX already? When is it coming out? In 2 weeks? That's a lot on Meta in one shot. That's unloading with conviction. Look at the weekly volume. This is the average. That white MA that you see right there is my 20, the weekly 20 average for the volume. So now if you look at the trend, is they're selling, they're coming in. Is this going to get more aggressive? Got to ask that question. This is not just, can it pop, right? And T, help me here. Is this an order block that was formed here somehow in a week?
Let me look at my chart. This is Meta.
Yeah.
What time frame are you on?
I'm on the weekly, like these last two recent candles.
It will. So the order block is going to be after this weekly candle closes, and it started on June 2nd. Hold on, I'm on the 4-hour. 1 sec. It will be after this weekly candle closes. Yes, we should be having order block printed.
So that being said, this can easily, right? Everybody's gonna be like, we filled this gap because this on a lower time frame. There's a gap here, right? That's why this is here. So now they're like, we filled this gap. We going back up, but then now this order block is sitting here somewhere, and then you just boom. There's another sign of a lower high, and then now you go, boom, and work the way down the levels, because that 520 is probably going to get a retest for sure. That 520 is going to get a retest. We just came down to it here. So if this is a position they want, let me see something here. Yeah. So if this is a floor that they want to reload, they're going to do it between that 520 area and this 480, 85. By that time, maybe the 200 day will be around here and we'll catch it. And that's where Meta might want to bounce. But then I'm definitely going to watch this. I'm very interested in that. That's a generational. If we see this, everybody put your alarm for 3:38 on Meta, because if we see this, we are gonna do an ad parade first, and we're gonna go on a nice Meta spree, because we about to. That would be a generational run.
And
this is really. Oh, go ahead, Ab.
I just wanted to say, I'm not showing my chart, but 538, I have a trend line, and we bounced off my trend line the month of April 1st, exactly off my trend line, and then we bounced again, and we seen all-time highs when we bounced off of it. Then the second other time we bounced off of it was March, the month of March, and now the next March will be this month, and that's at $538.30. That's an area to watch for a relief rally. That
Yeah,
shit's
nah, Biggie, Bitcoin's gone, bro. That thing about to go. It's over with. And honestly, with Bitcoin, because I was looking at it earlier,
well,
yo, Bitcoin ain't gonna see that all-time highs where it was for give it a year and a half. Bitcoin's coming to 50K. I'll see it at 50K. I'm possibly we could see it at 45K, 35K.
49.5 is what I have.
Mm-hmm.
up. I got 40K.
Yep.
What's
Yep.
that?
And if you notice the Bitcoin moves, when you get the crypto winner, the all-time high again, when it revisits, when it decides to take off again, it doesn't happen for about a year and a half to 2 year span. Yo, people are in
Follow
for
app if you
way
want
more
levels on
Bitcoin.
Bitcoin.
Been tracking that thing for
Mhm.
years.
Nah, you
Years.
be
You hear
hearing
me?
that. You be hearing that crazy. Nah.
Now
I'm
let's
amazed. I'm amazed. I see
let
Bitcoin. I'm like, damn, Ab's a savage.
bless us, Queen. What you got for us? The clear trading model.
What are you looking at? What do you see? You still see my
The
screen?
screen. Yeah.
I'm looking at your background.
Oh, I didn't know I was sharing.
I thought that's what
Yeah, I
you was
was
about to
reading
share
that
with us.
background for a minute.
No. Well, I mean,
Yeah, what's
since
that?
you
You getting
since you
fire
brought it
response?
up.
Yeah. Yep, perfect timing.
That is but no, I was not planning on sharing that.
Angie was reading
It's
it
too
the
late.
whole time.
That's funny. But yeah, this is what I put together. It's not ready for what is this? It's not ready for prime time yet, but this is how
Biggie,
I look at life and the market. Clear through and through, obviously because we're snipers, but just an identity, always learning, executing, adapting, and reflecting, and then taking it to longer term buy and hold, understanding the landscape, expectations, my action plan, and how I reassess. Looking at my weekly model, these are the ones that you see me post. I do this every week. What's the context? Who's leading? What events? How are we aligning? What's the roadmap? And then this is my daily execution that allows me to catch all those very beautiful SPY moves, which I'm still in. I love watching SPY die.
That's so good.
I just love watching this price fall right now. 736.95 should be coming up here if we don't bounce here. Anyway, so yeah, this is something I was working on. I shared it with Ab and Ram just as kind of like this is something I'm working on, but I didn't know I was sharing it just yet. It is my desktop, so I can stay grounded and stay clear.
Fresh.
Oh, perfect. Do y'all got anything else? I did not know SPY hit 740.
Oh yeah.
Mm-hmm. Mm-hmm.
739.82 to be exact.
I'll let y'all go before because I got something that I'm gonna talk
No,
about.
go ahead. I don't got nothing else. Rams, you?
Then what was I? Oh, I wanted to answer Pat. Yeah, I was reading his message. What he said right here. Where is it? Damn, I lost it.
Make
When
sure
he said, that's a fact.
Don't forget about it.
Pat said data like even with time, I've waited and end up losing money instead of taking a profit, bro. That is such a fact.
Yes.
Like time, I do the time for that's insurance.
Yeah.
That's just my insurance on the play. It's all it's for. But if I got what I came for, the insurance, I got the insurance for a reason, but I don't got to use it, so I'm good. Give me everything back. Boom, and then you reposition because that is the rinse and replay and repeat. When you make time, all right, cool. It played out. It played out perfect. How you analyzed it. You take your profits, and then it's coming back where I loaded. If I get a discount on it, I'm still gonna jump in. Or where I loaded. If we can hold, I'll jump in. Same play, same profit. So that what you said is key. I've been through that so many times. Like, wow, I got time. Let me hold. And then now the chart is telling me, bro, we under key levels. We under key moving averages. This is on the weekly. You got time though. So you gotta be careful with the time. Time is only exclusive to insurance. Let me just give my place some elbow room, breathing room. I know that I might not be at the exact key level I want, but I'm at a key level. So if we do take off from here, we'll take off from here. But I'm not gonna over leverage on the play because I'm not at the discount where I want. Or, okay, let me buy time to ensure that that play has the adequate time for my thesis to play out. Once I see we start breaking invalidation zones, okay, I'm gone. But
And I'll
that's
add one.
what time is good for. Yeah, of course.
I'll add one thing on that because I think we can get like caught up in the percentages, but don't lose sight that when you buy time, the contract's more expensive, right? So even though you have a lower percentage, it's a lower percentage on a larger amount. So 10% on $1,000 is the same as 100% on $100. You know what I'm saying? So I think sometimes we tend to still get caught up in the percentages and not realizing, like, if you look at the dollar amount, you might be making the same amount even though the percentages look lower because you bought that insurance, so you have a bigger premium, a bigger base. And I did want to show just one thing, Ab, before you take over.
Do your thing.
I want to just hit these levels on SPY, and then I'm gonna shut up for a little bit. So on SPY, deep pullback, love to see it, but just keep in mind we are not out of the woods. We're still very bullish until we break structure here at 731.68. That will be the first break of structure. We want to see that level. This is on the daily. I use 24 hours just because it cleans up some of the gaps, pre-market and post-market, but should be the same on the daily. Yeah, same thing. Until we break and hold this level, we're still bullish. So don't let this deceive you into thinking we can just YOLO into puts and write it down. We have a long way to go before we are bearish on the higher time frame. We built no structure up here, right? So these fib levels become a bit of a guide, but until we close below 694.89, we're still bullish on the higher time frame. So keep that in mind. We can pull back all the way. We can pull back all the way down here and do this for a little bit. Who knows, right? We can go up here, sweep this again, and come back down, and we can play in this area for months, for the rest of the year. Who knows, right? But keep in mind, we're not bearish until we start breaking these levels, right? So anything until you start breaking 731 is your daily target. On a weekly, you got all the way down here to get below this previous high before we start even hinting bearish. That's at 697, right? So keep that in mind. Now we can fall here because there's no structure to support us up here, but we're still pulling back in bullish structure until we start breaking some of these higher time frame levels and starting to see the structure break down. Okay, so I just wanted to highlight that even though we're getting a steep pullback and it can feel like, yes, it's a buying opportunity, let price prove itself to you. Let price see if we get down here, do we reject, do we hold, or is price accepting lower? What is it doing? Or do we bounce and start running back up? Let that tell you, not just, it feels bearish. Let structure tell you when to get in and when to get out.
Yep. That was good. That was really good. Yep.
That's all I can.
All right.
And look, and the beginning of the drop right there, what I see is a head and shoulders possibly forming there. Where were you on that 24-hour chart?
Yeah.
It could come down a little bit, take a nice rip up, make that last shoulder, and then if we break under, that'll cause havoc right there towards that 694 you said? I got 696, so that was very interesting.
Yeah, 695, 694.89 is what I got.
Yeah, that's the area. That is the area.
Yep. Yeah. And so, yeah, you can see that. You can see what, we could play around in here for a little bit. I wouldn't be surprised because think about several weeks back in our market structure discussion, right? Price is only going to do a few things. We're going to expand and contract. We're going to range. We're going to go one way or the other, or we're going to range. Whenever we have massive expansions, price has to take a breath. So we're taking a breath right now, but those breaths imagine holding your breath for so long, right? You hold your breath for as long as you can, you let it out, and you're like, It feels more exaggerated than if you hold your breath for a few seconds and then let it out. Well, when price is expanding like this, what was that?
None.
What'd you say?
I said, wait, what do you do again when you lose them? It's how you acted it out. My bad. I didn't know you was going to keep going.
Stay focused.
My fault.
Would you rather be at peace with yourself or war with the Discord? What'd you say?
Discord, probably.
That was so good, Ashley.
That was good.
See.
Oh, Ash, that was so good. But anyway, Price has to take a breath, and so it's been expanding for so long, but without taking a breath, that breath can feel exaggerated, but nonetheless, it's just a breath to keep going unless we start breaking some levels. So yeah, I'm right with you, Rams. Until we get down here, it's all just a pullback in a bullish trend. Then when we get down here, I start thinking, okay, maybe longer term puts make sense. Maybe structure's breaking. Maybe we are getting into true bear territory, which from all-time highs could be, it's way down here before we're in true bear territory from our all-time highs somewhere in here, right? So below 600, around 600 or so, which isn't impossible, but just know that yeah, exactly.
That's
I
a
mean, it's
very
not
pullback, 20%.
unrealistic.
It's
Right.
not 20%.
That's 20%. So anyway, just some guides to keep in mind as you're trading, as you're swinging, that be mindful of the higher time frame structure, and let the price tell you what it wants to do, because it always will. It always will. It's going to come back and retest structure. It's going to let you know when to get in, when to get out. It's going to let you know if this is a pullback or a trend change, if we just have enough patience to pay attention. And then the 24-hour and the daily, you get the same levels, but you see how in the daily I have all these gaps because these are like my pre-market gaps and stuff like that. The 24-hour just smooths that out for me. But you get the same levels.
Wow.
So I just like the 24-hour because it gives me a clearer picture as opposed to trying to read through and mark all those individual gaps. But I do like the daily to spot. Yeah, exactly. And I do like the daily to spot when we do gap up, because you can't see that on the 24-hour. But when I'm charting, the 24-hour gives me a cleaner palette.
Love that.
Okay,
Well,
now I'm done.
if y'all are still with us, we appreciate y'all. If you're on YouTube, I appreciate it if you like and subscribe. If you're not, let me go over and just see what y'all.
Oh, we got the YouTube on.
Yeah, can't forget about y'all. Mary, peace queen. Mamas, peace queen. Chandra, peace queen. All right, and everybody else we've seen. We got to make sure we're looking on there because they are commenting. Lost way too much profit, holding on for more profit. Yeah, that's every one of us done that, and we still do that every now and then. Well, let me just speak for myself. I still do that every now and then. AB and Rams, with the distribution stage 3 range for Meta be $485.45 to $796.25. Not even sure. I don't want to stay too much on here. We are like an hour and a half in.
Dang, why are you only asking AB and Rams? No, I'm kidding.
No. You're talking about the Wyckoff theory, right?
I'm kidding.
The stage 3. So you're talking about the drop from there to there. That range, it can vary. It can definitely vary, but 485 is definitely in play.
Yeah, I'm not sure what he's talking about. I was thinking wick distribution phase. That's
what I like. Yeah. The stage
What?
1, 2, 3, 4.
Yeah, I do alphabets. The A, B, C, D, but I do know what you're talking about though. All right. It's 2:55. I'm going to talk about macro real quick, and then what we have been waiting for is gamma. I'm gonna start off gamma, and then we're gonna let one of our mad scientists, Virgil, go crazy.
Go birds.
Is Virgil, is he still on here? He probably like, God damn, I'm just ready. Unleash me. Yeah, I know he's ready because I know how it is.
I'm still here.
I know how it is.
Patiently waiting. I'm still
What?
here. Because I'm still here. I'm patiently waiting. So
I know how it is. Them 2-hour things. I used to be on Trap Zoom. Like, damn, when is it my turn to talk?
Yeah.
I'm ready. I've been waiting my whole life. Ash, you absolutely. But I already I seen you try to have one of your friends clock you in. I already seen that she was late. Don't worry about that. I already punched you in for the time that you came in. You came in at 2:52. All right. So I don't know if
DE.
y'all knew what Talisha was talking about. Well, let's just expand on that. So when you're running and you start breathing, like, let me stop. All right, but where was I at?
Oh.
So all right. So I agree with Talisha and Ram. So am I sharing my screen? No, I'm not. I'm just talking so much shit. But I just really want y'all to understand the breathing thing that she was doing. I didn't know she was an actress neither. All right, so this is going to be back in play, and it's amazing that they said 697. If y'all don't know, we had this originally. I was up about like 8% to 13%, and this goes to the person on our YouTube, Pat or Pasta. Okay, it's interesting. All right, Pasta. So it goes back to what he said. I could have took my 8 to 13% because I knew it was going to bounce. I didn't, and I ended up losing the whole contract. I came out of that thing with like 10. I lost about 90% of the contract. And I said it was going to bounce at 731. What we're getting now is what we said. The first snap 730 and 39 cents. And then I don't think it's this one. It might be the other visual thumbnail, but oh, right here, 731 Hopium. Retail would try to save it. We watched the bounce fell. So this could possibly be the bounce that fell. It was supposed to be 750, but I'm not the market and I'm gonna be wrong. It happened to go longer, higher. I thought 657 was the highest, if anything, went right past that. So now we could be dropping back down. So mark Talisha levels, mine's 730 and $731.83, my support test, but I want it to snap $730.39, and then I'll be targeting 710 overall. And overall, I have on SPY 680. What did I just do? All right, so yeah, so that's that. Before I get into the macro, I just want to give a shout out to Rams and Talisha because I just remember before this got to where it is at now, like I don't want to put you on the spot, but like Rams, when he first started, he knew he was a good trader, right? But he didn't know he would be such a great teacher, in my opinion. He didn't have like he would doubt himself a little bit and not really want to share with y'all his gift, which was selfish of him. Long story short, we talked and stuff, and it was 3 months ago when we cooked up the ideas for the Discord. We didn't have none of this stuff 3 months ago. I was just looking on that time like, damn, time flew, and now look at Rams cooking, throwing out plays. Same with Talisha. She knew she's a teacher. She's a professor, but at the same time with the market though, she didn't transition her being a professor and like real life. Well, not real life, but like as her career, she didn't really think of it like that she would excel at it so easily. I want to say, but I don't want to put words in her mouth. But the moral of the story is that 3 months ago, and Talisha, when we first invited her in, she was skeptical. She hesitated to jump in, and I'm glad that she jumped in because we all need each other, and the progress would have been cut in half if I was missing one of the two. And I just want to say that y'all doing an amazing job, and I'm so happy that y'all came and build with me because I wouldn't have none of this. We wouldn't have none of this. We would just have just snipers on YouTube. Honestly, I probably would have took a while before I started the Discord. Or that all those ideas came because of the Discord, the terminal and everything. So I just want everybody to just give them to a standard ovation. God. So for real though, because they deserve it. They work so hard, and then we're not.
I'll mute and do a real one for that one. Woo-hoo.
Yeah, there you go. And then we got to also understand we're not robots. Like we're humans at the end of the day. So we should praise each other, and they have families, and the fact that it's like amazing that they're able to still take the time out their day and be in the Discord all day basically and hop on these Zooms for 3-4 hours. I appreciate y'all a lot. And
I
yeah,
appreciate you, my bro.
on this journey. So
Yeah,
that's
likewise. It's I was super skeptical, but I'm glad that I made the decision to join you both.
facts.
No, we're
And I
glad you did.
I want to add on Angie's comment because that's why I was skeptical because it's such a male dominated space. And I get tired of having to prove myself as a female that can read these charts pretty well. And so I was like, I don't want to just like, I don't know. I don't want to just, be in there with a bunch of men and it's just weird. And then having to always like, I know something too. I don't want to do that. I don't like that space. And so I'm super grateful that I decided to join you too. And it's built my confidence a lot. So thank you both as well.
Of course.
Glad to see her.
All right.
We're
So
very, very
this
glad.
is the 18. Yeah. And yeah, we're different, man. We're different. We're different. That I'm saying, you don't see no like it's like people don't think about it. Like you have a king, you have a queen sitting next to the king. So you don't see that on no Discord though. You only see a king. And that's why it's chaos in there. But this Discord is just so positive and we're just laughing, we're supportive of each other and we making money. And most importantly, we always talking about God. That's why we just are so successful already. It's only been 3 months, but the progress that we've been making has been phenomenal. And it's been like, sometimes I sit back like, wow, like just watching and how things just fall in line. Like I was telling Rams, how like Rams was the first one to say, let's do the Discord. Once he told me, I'm the type of person that you only have to tell me something once. Even if you say not right now, I don't care what you talking about. We'll get out the fire. Like, all right, not right now. Later that night, I'm cooking up a whole thing. I came to Rams probably later that day or the next day. And the next day I came to Rams and I had the whole Discord organized. And like, this is how I want the health thing. Like all of this stuff me and Rams looked at before it was here. It wasn't called Sniper Execution, but we had another name for it. The mind, body, and spirit was on the list. All of that stuff. So to see it now is just so amazing. To see the gardening section take over, that shit makes me so proud because it's like we didn't even have to. I even forgot that I had the thing until Talisha was saying that she was going to start the channel because one of the snipers had asked about, or Talisha might have seen how Forever After Money was asking a question to Levine about gardening and stuff, and then boom, it's like y'all don't have to see my vision, but understand if we're on the same frequency, the vision will start to come to you just out of nowhere. So it's amazing how things just fall in line. So I just wanted to praise them, and I wanted to praise everybody as a whole because we're just so positive. This Discord doesn't just help with charting; it helps with this mind that we have. And you could be down one day, you come in the Discord, you'll probably be a little more down, but I promise you, we'll take it. Majority of the pain that you're feeling, we'll take a lot of it out of you. So that's really why I wanted to create this space for something more than just charting. I wanted to be set us apart from every other Discord. Now, another thing is more praise. I don't know if y'all don't know this, but we're a free Discord, right? And the plays that we've been just giving out, because and it's not financial advice, we're not telling you to push the trigger or nothing. We're just like, hey, we're taking this. We don't want to be selfish. If you want to join us, join us. So we give it out. But today was just so amazing because the way Talisha was looking at puts from 2 days ago. I'm not going to say everything, but she's been looking at puts though, and She hopped in that thing and it's been playing out. Then today she walked us through it, playing out. Rams, every play that Rams have given out, he's don't expect it though, but he's at 100% hit rate. But don't expect it. He's going to lose eventually. Inshallah, he doesn't lose, but I'm just calling it how I see it. It's just, we all take losses, but the plays, and he done gave like a almost 300% banger. And like, we don't ask for nothing. We just ask for loyalty and just your loyalty, and just let us know that you're here with us, that you're rocking with us. That's all I ask for, is just really your loyalty, for real. I'm really big on that. And I give so much to y'all, like a lot. I don't really be exhausted, but some days it is a lot. I just tell myself it's supposed to feel like this, but I sacrifice a lot for y'all, and I don't have to. I know that, but I love this shit. I love it a lot. And I don't want nothing from y'all. I just want y'all loyalty. That is it, for real. Because like, the people that you give so much to are the ones that cross you, and it takes one person to mess up what we have. So I pray that we could just not have no envy, no jealousy, and none of that, and just grind and rise together as a family. So this right here, this terminal, man, is so amazing, because I had put the whole thing here at $749.96. Long story short, it told us 740 puts, and Forever After Money's been watching this thing for 3 days, and he was saying how accurate it is. And what I love that he did was he took the call and wall in the gamma flip area, and he put it on his chart. And if you look at this chart, look at the call wall. You hit right at the call wall, 760, right? And then you come down, you even retest this gamma flip area and consolidate for a little bit before dropping. And now look, the target smacked at 740. This terminal is so phenomenal. And I ain't even going to tell you how many days it took me, because I ain't gonna lie. Let me just toot my horn a little bit. It only took me 2 days. It only took me 2 days to make this thing, because when I see something that could really benefit my people, our people, I don't think about sleep at all. I go all in, and I did like to no sleep at all until I finished it, and I just kept working on it. And all praise is due to Allah. It paid off, and it's just amazing. We hit the 740 wall, and so far, since I've been tracking it all over, it's 2 for 2, and then one play it was neutral, because it just said off limits, not to get in. So it's amazing. It's an amazing tool. So with that, I'm done with that. I'm gonna do real quick a macro thing, and then we're gonna get right into gamma. I don't want to take up too much of y'all time. We normally end about 4:30. I think we're still on track for that, because that got to be my deadline. Then I got to get the kids. So with Levine, damn, my memory is so good. This is what you get when you don't poison your body. So what Levine has said, she explained how the market is, but I love how she explained it, because she gave the market a personality. She said that it's like confused. It drops, then it goes up, then it just consolidates. It doesn't know what it wants to do, right? So I wanted to take us back to 3 months ago, before the Discord started. 5 months ago, y'all. I gave a simple summary of my 2026 market view before Christmas, and I want to read it to y'all. So we're going to see if these things play out, and then we'll see what could be happening later on. And I'm just doing this not to toot my horn, but just to show y'all that, I'm giving this game, and I hope that y'all are actually like reading it, because I don't do it just for me. Like this, what is going on here? This could actually like help and change a lot of our lives. Like my macro, like my eye, like the way that I could just like my ability to not even read the charts, just the macro is at an elite level. And I want to show it. I want to give it for free, but I just want y'all to like really just pay attention to it. I don't do this stuff for nothing. So join our X. We already got 41 posts on there. Isn't that crazy? We just started this thing 2 weeks ago. So boom, let's read this. So the market is likely entering a phase where things stop being easy. For the last few years, stocks have bounced quickly after every dip, and bad news hasn't mattered much. That kind of environment doesn't usually end with an instant crash. It fades first. Early in the year is where the most risk shows up. Between January and March, I think stocks are vulnerable to a large pullback, and I'm leaning towards something closer to a 20% decline rather than a small correction. I was wrong. We got what, a 10 to 12% or 10% pullback, right? This wouldn't necessarily happen because of one big event. It will happen because money gets tighter, leverage slowly comes off, and buyers become more cautious. That kind of market feels frustrating. That's what Levine said, right? Prices don't collapse all at once. That's what Levine said, right? But rallies fell sooner. Volatility picks up and confidence weakens. That's what she said as well, right? Over time, that wear and tear could turn into deeper drawdown. And this is where we're at now. I'm looking for a massive drop in July to August. I'm going to do another one to give an update from the mid-year to the end of the year. I don't think 2026 is automatically a disaster year. Credit markets still look healthy, which suggests the system isn't breaking, but likely is a sharp decline followed by attempts to stabilize or recover, especially if the Federal Reserve steps in later in the year with easier policy. This is what Ram's been talking about. I also don't expect the same stocks to lead. You hear me? I also don't expect the same stocks to lead. You hear me? The biggest tech names that carried the market before may struggle. The biggest tech names that carried the market today may struggle, while smaller companies and value stocks have a better chance to do relatively better. We're seeing that, right? Politics adds another layer of uncertainty, which can cause markets choppy even if nothing bad actually happens. And despite the hype, precious metals aren't where I expect leadership to come from, right? Have y'all been checking the metals? What are they doing? 2026 probably isn't a clean bull market or a straight down bear market. It looks more like a late cycle year where markets grind, shake people out, and eventually force a reset. The biggest risk isn't missing upside, it's getting worn down by volatility. For beginners, the takeaway is simple. Expect more swings. Don't assume every dip bounces. Risk management matters more than hype. Patience will matter more than predictions. It may technically hit bear market territory, but I don't see it as a classic bear market, more like a sharp correction and reset rather than a long grinding downturn. A 20% drawdown doesn't automatically mean a prolonged bear market. And that 20% drawdown is still going to happen. I promise you. It will happen. And if I'm wrong, y'all could clown me, get on my butt, all that. But the 20% drawdown will happen though. And I'm just showing y'all this so y'all can see, like, we're giving you this months before it happened. This was 5 months ago. Everything played out on here. Take advantage of this while it's here. Like, well, it's gonna always be here, but just take advantage of this free game that we given. Like I said, the value speaks for itself. Just and another one of the reasons why I do say that, because if we go to the Discord, I honestly I love having everybody in there, but I just have a thing with just giving out my idea. Like, I look at everyone in here as a family, but if you're not communicating stuff, I really don't know your intentions. And it's just like childish stuff that's been happening. So I'm just trying to like lock in on just what we do, and I'm trying to like make sure I bring the serious people with us. Everybody can't go, right? And I'm big on that. So I didn't mean to like upset anybody or anything. It was nobody that's that like look, like my beef list, it wasn't, y'all wasn't the reason why I did this. It was like the timing was crazy though, because I know after like I say I keep making these jokes, the next day I made this. But no, I just want serious people in here. I want everybody that's on the same page, because it takes one person to break up what we got. I can't keep eyes on Ghost and stuff, and it's not even about keeping really eyes. I just know, because I speak to all of y'all in here. I know that y'all have a pure heart, and y'all are really serious about this and really want to elevate with us. The Like I said on my last live, that when you go to church and the mosque, those are the areas where the devil will sit next to you, right? So I know it's big. Why is App talking about this? If the shoe fits, wear it. So yeah, ain't nobody gonna break us out. I'm gonna make sure that we stay focused and locked in, and I'm always gonna speak my mind, and I'm always gonna do what I have to do to protect the energy in here. And I hope that y'all understand. That is all that I want to talk about. We can go right to the game after I read the comments or after this commercial. Beep. Welcome. This is the Snipers Community Center, and I'm your
Go ahead and check
host.
out Spy. We at 7:35 on Spy.
7:35.
7:35. Well, just
Damn.
7:35.88 right now. We should get to
Shit.
7:33.96 and then 7:31.68. We should. Let's see.
Hey man, I've been calling this
Just gonna
for a
look at Spy real
minute.
quick, and then we're doing good on time, Virgil. I already know. I know you. I know how I know how these mad scientists are. I deal with Rams all the time. I know I got to give you a lot of time, because you're gonna get really locked in. Don't worry. I'm gonna go through mines, and I'm gonna let you do your thing, bro. I like that y'all are so like detailed with it. It's like y'all are so detailed. Whereas though, if we're not catching something, if we just sit there and wait and continue to listen, we'll eventually have that aha moment, because y'all really go into y'all really do a deep dive. So my level is $736.37. We're flirting with it right now. I have a few levels. I don't like this area right here. This area right here is so choppy. All right, once we break under this $736.37, we're about to experience a lot of chop. And that's from this 735 to 730 area. It's gonna be so choppy. You gotta watch for fake outs here. They're gonna take a lot of liquidity in this area. If you are deciding to get in puts, be very careful. Try to get in puts at 738.70 off a rejection, or 741.
And even when
Do y'all want to?
drop like this, still wait for a retest. We'll still retest structure. It may not be on a higher time frame, but go down and look. Don't just jump in.
That's a fact. I was just about to ask if y'all wanted to add something to this before I got into the gamma.
I agree. Yeah, remember the next levels. We can't hold this 735. We got 730, 25, 715, 710 is a big, huge key level. And then you got your psychological 700 until we get to that flag, 696. Yeah. It's been weeks. The top is always like this. And for me personally, anyway, I'm very, very selective every time we come to the top. So, and then I start seeing what structure is below, where if we start getting to these levels, which at one point or another we will, it's not a matter of if, you know how they say is when. So I start mapping out, and you look at 710, 710 is key. Lose that 730. But right now, like T said, don't just go shorting this to the ground. This is not where you short. Because right now, off of this time frame, even if you were looking at this 15-minute, what would you do here? You're at a demand level, right? You got to expect a pop because you're far extended from, what's your green right there? Ab, your 5?
My 10.
That's your 10. So look, you're far extended from the 10, so you might get a short pop, right? A dead cat bounce from here, back into the 740s, and then possibly reject around that area, and then come back down into your 730s, crack 729. Then you start seeing the levels down below. So you see even there, you can still, you're still there. You're still in the area. So you're still at 735. It's easy to get 737, reject from there. And that's just a cascade down right here. But you don't just short it from here. You want this thing to pop and reject up top. But this is, it's not even if, it's when is this going back to 710? When is it going to touch 715 again? It will. Right now, this is not going to be that easy. Unless something major happens for this weekend, you'll see the straight waterfall all the way down. But they'll pop this. They'll pop this up a little bit, get everybody like, oh, it was just a boom, and then you'll come back down because you're going to make another lower high. So you got to be very careful here. And now that it dropped so much, you have to just be careful shorting it from here.
Yeah, because where would your stop loss be?
Right.
Like you'd have to have your stops so wide, and then it's like the levels, ab and rams throughout. The risk to reward may not be worth it. So you might win the trade, but it's not worth it. Like you've been better off just going to the casino at that point, you know?
And who likes blackjack and Russian roulette in here? So,
I mean, blackjack is fun. I do love blackjack, but
blackjack too. I used to play poker a lot.
I like poker.
Little cakes.
I don't have a poker face though, so poker is hard for me.
All right, let me catch up on here. Big E, I wasn't ignoring you. I seen your comment pop up, but you're outnumbered in most professional spaces. When our voices are not there, it never completes. It's a fact. Rams saved me from coming completely quitting, and one of Talisha's biggest fans. I'm glad to see her in her bag. Let's go. See, I like that. No ego here. We all applauding each other. I think I'm her biggest. She impressed me long before Discord got started. Yeah, I noticed Talisha. I have an eye for talent. I swear to you. Said it like I'm drafting people, but no, I noticed Talisha and Rams in the Patreon a long time ago, months ago, like over 6 months. I want to say a year ago, right? Hey, we fighting over team. I'm her biggest fan. You're a celebrity.
Don't start.
What? Do you not see the comments, Beyonce? I mean, Talisha?
Stop it.
Hey, Talisha don't. Yo, we're similar, all three of us. Talisha don't like praise neither. Hey, Levine, I see her. No, they're going crazy. They're fighting over you in there. All right. I hope y'all are eating on y'all plays. If y'all are, Talisha, I know you're not a felon, so I could give you a fire. How do you know? Looks could be deceiving. I was told never judge a book by its cover. Actually read through it. It'd be the ones. It'd be the ones that you think like, oh, no way. But those be the ones. Secret serial killers and shit.
Well, I wouldn't be able to teach if I was a felon, so I'm assuming he went with that.
She said she wants the SIG. You can pass it to me, Talisha. Yeah, she wants the SIG. That's one of her favorite ones.
No, I'm gonna keep it. Shoot, what you talking about?
Oh shit. Never mind. All right, never mind. I'm just going through the chat. We're about to get into the game. Hold on. I got you. Loyalty is big in my world. That's a fact. Here for life, rain or shine. I know, Jelly. I'll be watching. Sandra, I know it'd be like a rabbit hole. Damn, I missed a lot. Golly. Oh, let me back in. All right. How y'all feeling before we get into this game? Because we're gonna need y'all focus. Because it can be a little tricky. But it's very simple. It's just you gotta really pay attention when you're getting into gamma. You can't be doing other things. You gotta really be locked in on that. 725. Mary has 725 at her level on spy too. Are you a sniper? Yeah, triangle. Yeah. That's funny because before we got together, this is what I was telling them. We're a triangle offense. All right. I hope y'all feeling amazing. We're about to go into Gamma now. If y'all have any questions, um, just I ask that you wait until we're done, or wait till I'm done, and right, and then when let or I kind of because I kind of want to just flow, but just write down your notes. Wait until Virgil is done, and then y'all can hit us with the whole question thing, and then we'll leave. We'll be done. That'll be the last thing, and then yeah, that's it. Yeah, shout out to MU. MU's doing her thing. I be hearing a lot about MU, and I used to day trades and stuff. Gotta throw this thing on the charger. Yeah, go make you some tea now so you could be up because Shock definitely about to have open up a whole bunch of light bulbs in your head. All right, so let's get into. Am I sharing my screen? Yeah, I am. The ultimate Gamma options trading masterclass. The quantum forces of option flow, understanding delta, neutral. I can't pronounce that word. Gamma regimes.
You're sharing your screen ad?
Oh, I'm not.
No.
I thought I was because I was looking on YouTube. I must have clicked off of it. Thank you, Rams.
You got
it. Regimes and the invisible walls limiting financial asset volatility. The foundation, the options dealer. Where is it showing now? The invisible counterparty. Option contracts do not trade in a vacuum. When institutional or retail investors trade calls and puts, a market maker, which is the dealer, think of it like you're at the table, the gambling table, typically takes the opposite side to provide instant liquidity. Dealers are not directional speculators. They do not care if the market goes up or down. Their objective is to remain perfectly risk neutral and collect the bid and ask spread. We're gonna make this to a video. This is gonna be so fire. So to eliminate direction risk, dealers engage in continuous delta neutral hedging. If they sell you a call option which has a positive delta, they inherit a negative delta position. Remember, they typically take the opposite side in liquidity. To offset this, they are systematically obligated to buy shares of the underlying stock to bring their net exposure back to zero. The market makers only can make money if you they only make money off of your delta. They get about 50%. Is it Virgil?
Yeah,
That's how they make them.
Good.
Yeah. Okay.
I was gonna say at the money is 50%.
Okay. Thank you. So, what is delta? The rate of change. It measures how much the option price changes for a dollar move in the underlying stock. Calls have positive delta, 0 to plus 1.00, 100. Puts have negative delta, 0 to negative 1.00. A delta's hedge. A call with a 0.50 delta requires the market maker who shorted it to purchase exactly 50 shares of the stock to stay hedged. Delta is constantly moving based on stock price, time expiration, and volatility. Right? This is going to be recorded. So we'll be able to go back and watch this over because Gamma is one of those things where you got to watch the video. I'm telling you, like 3-4 times the same video. Gamma, the speed of delta, the core engine of acceleration. If delta, damn, I made that shit black. If delta is the speed of an option price, gamma is the acceleration. It measures how fast the delta changes for every dollar move in the stock. Gamma is highly dynamic. It peaks when the option strike is at the money. and collapses to zero as the option moves deep out of the money or in the money. Gamma forces dealers to constantly buy or sell stock as delta shifts rapidly. Gamma explodes for the at the money options right before expiration. Your zero DTE options feature catastrophic gamma risk. That's why zero DTE is dangerous if you're not really sharp at charting and being exceptional at your entries and exits. As stocks moves, gamma forces programmatic buy and sell orders. I got 17 slides, so not too, probably like 10 more minutes, and then it's on you. Long versus short gamma matrix. Long gamma exposure occurs when dealers buy options from the public. Their net inventory is long options. The behavior, they buy as the stock drops and sell as the stock rises. They buy as the stock drops and sell as the stock rises. The effect, dealer hedging act as a structural shock absorbers, heavily dampening intraday volatility. Short gamma exposure occurs when dealers sell options to the public, retail call buying mania. They sell as the stock drops and buy as the stock rises. Short gamma. They sell as the stock drops and buy as the stock rises. Remember, long gamma, they buy as the stock drops and sell as the stock rises. So the effect of the short gamma, since they sell as the stock drops and buy as the stock rises, dealer hedging amplifies momentum, creating dangerous feedback loops and explosive price spikes. That's what you're seeing today, right? That is exactly what you're seeing today. Where you're seeing, Talisha even said, she made a joke about gamma, but
Said holy gamma.
yeah, she knew that it wasn't just sellers. She knew it was the gamma helping her trade, flushing it down for her, like allowing, well, the market makers are on your side now. Institutions are forced to jump on your side now. You don't need the retail to be on your side, right? You got billions and trillions of dollars moving the market. All you got to do is just follow with them. So the hedging engine in action. The client buys calls. Retail buys massive calls at the $100 strike. Dealer is now short call, short gamma. Retail buys massive calls at $100 strike. Dealer is now short call, short gamma. Number two, the initial delta hedge. Options start at 0.30 delta. Dealer instantly buys 30 shares of stock to secure zero net bias. Option starts at 0.30 delta. Dealer instantly buys 30 shares of stock to secure zero net bias. Just stay with us. I know. Stock rises to $100. The stock hits the strike. Delta surges from $30 to $50. Dealer must aggressively buy 20 more shares. Because remember, we go back to what is the Delta's job? What they want to stay neutral, we're neutral Delta, right? That's the whole game for them. I don't remember which one it was, but let's continue. We could just go back on the replay. Well, y'all can. So the stock hits the strike, right? At $100. Remember, we was at $30 delta. Delta surges from $30 to $50. The dealer must aggressively buy 20 more shares. Can anybody tell me what happens now that the dealer must aggressively buy 20 more shares? What's the price action going to look like? Everybody besides Virgil. What will the price action look like once they aggressively have to buy the 20 shares to make it now 50 delta instead of 30? How will it go up? Will it grind up or will it explode up? Does anybody know? Yes. Yeah, exactly. Exactly. I'm trying to show you this is why these things take off like that when we don't even know. I know I didn't know. I'd be like, damn, this thing flying. There must be a whole bunch of buyers in there, but it's not the buyers though. So the feedback loop, dealers mechanical buying spikes the stock price even higher, forcing additional hedging loops. And they're just adding in, dumping. They're adding fuel to our fire to take off more, to defy gravity and just blitz, just crack through the ceiling. That's why you see you have your little trend line support resistance. You just see that candle just go right through that thing. Like it don't even hesitate at that. It just pierced right through the closed big body right through that whole thing, just defying gravity. Positive gamma, the two market environments. The magnet environment is markets trades inside a tight box. We remember this, right? From last week, beginning of this week, price rises are met with dealer selling, and price drops are met with dealer buying. Implied volatility, IV, Levine, compresses, leading to peaceful, slow, upward trending markets. Negative gamma, the fast zone. Market makers must chase the price, right? This is the environment that I love. As the index falls, they are forced to aggressively dump shares. That's what you're seeing today. Exuberating market crashes, intraday ranges expand by 2 times to 4 times relative to positive gamma. So the moves are way larger in the negative gamma environment. You're not pinned. Key regime rule, determine spot position first. Check daily whether price is in positive or negative gamma space. This determines whether your strategy should favor mean reversion, your rubber band. If it's stretched too far, it has to pop back to the mean, the middle, right? This determines whether your strategy should favor mean reversion or momentum trading, which is the trend is your friend. The volatility threshold, 0GX, the gamma flip point. The gamma flip point represents the exact price level where the total market net gamma transitions from positive, suppressing volatility, to negative, amplifying negative volatility. So let me say that again. The gamma flip point represents the exact price level where the total market net gamma transitions from positive, suppressing volatility, trapping it, to negative, amplifying volatility. Now you got a huge range. When an index sits directly on top of the flip point, the market becomes incredibly unstable. A slight slip below this key level triggers systematic market making selling, turning small pullbacks into cascading sell-offs. This is what we're seeing today. Yesterday, we was on top of the flip point a lot throughout the day. Just kept flirting with it. Today, we gapped down below it. Now market becomes incredibly unstable, and levels triggers the systematic market maker selling. So the maximum resistance strike, the call wall represents the strike price holding the highest concentration of call side positive gamma exposure across all active option expirations. As the stock price rises towards the strike, option deltas approach $100. Dealers must sell stock continuously to hedge. Or I say $100, but 1.00 deltas must sell stock continuously to hedge. So as the stock price rises towards the strike, option deltas approach 1.00. Dealers must sell stock continuously to hedge. That's why your call wall can act as resistance, and you start to see about 60 to 80 cents before that call wall, it starts getting choppy. Forming an invisible mechanical ceiling that caps upside momentum during normal market regimes. This is what I'm talking about right there. breaching the call wall ceiling now. The pivot from resistance to rocket fuel. Dampening decay. Deep in the money options lose their gamma density. When the price forcefully breaks above the call wall, the dealer's protective ceiling of selling pressure vanishes. That's why you see that candle just go right through your resistance like nothing. The short squeeze mechanics, and I think Virgil's going to touch up on this a lot more than me, and he's more fluent than this because the Vanna, I don't really know too much. He's like one of the first people I've seen talk about it. If a strong bullish catalyst forces price through, dealers short those calls are caught in a bad spot. To limit unlimited upside loss, they must rapidly buy underlying shares. That's why the price starts going crazy. You start seeing SPY from 757. Next thing you look away, next thing you know, now it's damn near touching 758 that fast. So the ceiling becomes the floor. Once breached, the call wall frequently converts to a strong support level as the dealer hedging force shifts from buying. Once breached, the call wall frequently converts to a strong support level as the dealer hedging force shifts from sell hedging to buy hedging. You seen when we broke that 755 call wall, we came down, touched it, boom. We ran. Like literally, it ran to 758, 759-ish area, and didn't look back till days later. The put wall, the invisible safety net, defying the put wall. The put wall is the option strike price containing the absolute highest concentration of put side gamma exposure. The put wall is the option strike price containing the absolute highest concentration of put side gamma exposure. This is where large institutional portfolios aggregate protective puts to hedge against systemic downfalls. It acts as the lower boundary of the expected trading range. Hot. The support mechanics. As the stock price slides down towards the put wall, dealers who sold these puts to portfolio managers are forced to buy shares of stock to maintain neutral. Damn. This massive programmatic wave of dealer buying hits the market near the put wall strike, acting as a highly predictable support floor. Woo! It's hot as hell outside. I need to go up under that AC right now. Let's try and check the temperature. Critical breach warning. The put wall breach. When the support floor cracks under heavy selling volume, the buying defense collapses. That's what we're seeing today. Market makers instantly switch to short selling stock to stay hedged, converting the put wall from a safety floor to a heavy trapdoor that accelerates the crash. How are we feeling? How are we feeling right now? Y'all with me?
Great.
Good, amazing. Good. Good. All right. So visualizing the gamma profile. This is the 510 call wall right here in green. It got 12.4 million GX peak resistance. So this is the strike, $505. It got 7.2 million. Then this is the 500. This is the gamma flip. Do y'all remember what the gamma flip? Anybody remembers what the gamma flip is? Can anybody tell me what the gamma flip is? Is the gamma flip where it act as resistance or it act as support, or is it the front line? Yeah, so it's going to decide whether, like Talisha said, whether we're in negative or positive territory. Um, so strike 495, negative 5.8 million GX. The strike 490, this is the put wall, negative 10.1 million GX, the peak support floor. You'll be trapped in between these ranges of 490 and 510. Depending on where we're at in the GEX, if we're above it, we know 505 will be our target. But we want to really target 504. Really, that's what I do. I do a dollar under, because I know market makers start hedging once you get closer in the money or at the money. And this becomes our resistance. Once we break this, we fly to 510, and vice versa. This chart shows the typical option landscape layout. Stop trading between $500 and $510. Spot trading between 500 and 510 remains highly suppressed and stable. Slipping below $500 shifts dealers to negative gamma behavior. Below here, you're going to get bigger moves, right? Above here, you're going to get a grind, or it gets choppy. It confuses you. You'd be like, damn, like SPY's been in this tight range for days. That's because you're above this gamma flip. You're in a positive gamma. You want to be a negative gamma. You really want, if you're a day trader, you're going to love negative gamma. All right. I just got 3 more slides after this. The gamma regime playbook. Shit. Positive GEX above flip. Dealer behavior, buy low, sell high. Volatility action, suppressed. Mean reversion. This is positive GX. Sell iron coders, trade mean reversion off call put walls. That's the strategy, the recommended strategy. Damn. Negative GX, below flip. Sell low, buy high. Expanded. The volatility expanded. Extreme moves. The recommended trading strategy. Long straddles, trade breakdowns, breakouts, buy protective puts. We're gonna get into this more. I'm learning it. You know who's real fluent at this? He's in the Patreon. What's his name?
He will. He
Yeah.
will. He
Yep.
will.
And it's another one too. He's still in. Oh man, what's his name? He was still in there when I left. I forgot his name. It's another one. So at the call wall, continuous hedge selling. That's the dealer behavior. Volatility action rejects upside limit. The recommended trade is right short calls, fades. Watch for breakout triggers on massive volume. At the put wall, continuous hedge buying. The volatility action bounces off a structural floor. The recommended trading strategy: sell premiums, scale long positions with tight stops below put wall. Oof. The OPEX expiration life cycle. The wall setup. Call put walls crystallize in open interest weeks ahead. Levels act as highly reliable range bounds. Step 2, the magnet effect. Heading into monthly OPEC, spot price gets heavily pinned near key strikes due to massive gamma decay. Shout out to Virgil. He taught me that. Expiration exertion. Monthly options expire on Friday. Millions of contracts instantly vanish, resetting net dealer gamma to 0. Monthly options expires on Friday. Millions of contracts instantly vanish, resetting net dealer gamma to 0. Lakia just said we have OPEX. When was it? She had put in the chat. I lost it though. So post OPEX release, volume containment ends. Stocks frequently experience rapid trends or breakout shifts the next trading day. Almost done here. The option flow checklist. Actually, this is the last slide. 5 steps to trade like a quantitative fund. I told you I want to be a hedge fund manager, and I will be. Identify the flip. Calculate where spot lies relative to the zero gamma flip level. 2. Locate the boundaries. Map out call and put walls as a structural extremes for the day. 3. Check expiry profile. Is OPEX approaching? Expect mean reverting behavior if yes. 4. Watch the volume. Shout out to Rams. Ensure breakout volume validates any breach of the walls. Virgil actually uses something that, like, where I get it from, like from our Rams off the chart and Insider Finance, they don't have the volume on the GX chart. I forgot to tell Rams about that. Now he knows, though. That'd be dope if we could add that. Execute systematically. Never draw emotional lines. Respect the raw contractual calculations of dealer hedging. By tracking market making mechanics over emotional chart patterns, you trade on systematic mathematical structures. And that is the ultimate gamma options trading masterclass. And that is all from me today. And I'm going to pass it over to Virgil. We're doing amazing on time. And I'm going to let him go crazy on this. And I'm about to become a student.
So you're going to pass me over the I can share my screen here.
Yep. Let me stop sharing right now. You should be able to share your screen now.
Okay. Let me see here. Share.
6/8. So June 18th is OPEX. Let me know when it's in the chat. Yes. Numbers. This gamma thing makes you like that breathing thing that Talisha was doing.
Okay, so I'm gonna talk about gamma today. My name is Virgil, and I've been trading for a couple years. I met Ab and Talisha and Rams. We all met up in the Patreon. I was like the fourth wheel, kind of just everywhere, doing everything. Now, I'm going to tell you about myself first, because the way I trade is maybe a little different than the way a lot of other people trade. I don't do options a lot. I just don't have the tolerance for it, the temperament. I'm more of an equity trader. I buy and hold, and I'm a day trader. I don't want to be a day trader, just how my mentality is. I can't sleep good at night with a lot on the line with huge premiums and stuff like that. So that's just not been my thing. Options, where people are buying options and stuff like that, I've come to find out the structure of the options market and kind of learn about that. So while everybody is, participating and buying, I'm looking at the machine behind it. I got into ICT because of Talisha, and she was just doing amazing in the Patreon, calling out levels and breaking a lot of people's hearts. And, and I just had to figure out what she was doing. And so through ICT, I learned a lot about order flow and order blocks and fair value gaps, kill zones primarily. When the market opens the first 15 minutes or 30 minutes, we got a kill zone there. We got a kill zone in London. There's a kill zone in Asia. So I want to be in the market for those brief periods where prices is actually accelerating. If I get into an area where it's chopping around and stuff, I end up holding the play too long all the time. So I need to be getting in. My levels need to be, for me, my levels need to be good. My entries need to be on point. If my entry's not on point, it's game over for me. I just can't tolerate chop, So that's how I kind of came to Gamma, just watching the opens and stuff like that, open range breakouts and things like that. And so what Gamma has allowed me to do was to validate the inefficiencies in the market. When is the market being inefficient? That's what we really want to know. We want to know when the market is overstretched. When do we have opportunity? Because there's not always opportunity in the market. And so I'm trying to evaluate when are my opportunities to trade? Because they're not all opportunities. So, we say these different windows. So Gamma is trying to anticipate the dealer and what he is required to do. So we talk about a lot about trying to find an edge in the market. And we're all looking at the same indicators, moving averages, and we're looking at order blocks and daily candles, candle patterns. I've studied it all, and what I'm really want to do is find an edge, So a person that's in the White House, the butler, he has an edge. You can probably hear Donald Trump and whoever else talking about insider trading. He has an edge. Edges come from maybe you being in the industry and you recognizing a product ahead of everybody else, and developing a real edge. So the edge I'm trying to exploit is what the dealer is required to do. So he has requirements. He has to hedge these positions to balance his book. We talk about balancing his book. The dealer's trying to be neutral. At the end of every day, he wants to have a neutral position. He don't want to owe anybody. He just wants to be neutral. So that's the game. And when he's out of position, then he's going to try to get back in a position. And like AB said, it's going to happen fast. It's going to displace. And then it's just going to stop. It's going to get to a call wall. It's going to get to a gamma flip, and it's going to stop. So what I'm trying to aim to do is just kind of maybe discuss my methodology. Not that it's the greatest yet, because I'm still working on it. I'm still learning it. There's a lot to know. Gamma levels, you can find them everywhere. There's so many different services I've looked at. Me and AB the other day, he had a GEX level up, and I had a 0-day TE GEX level up. My level hit that day. Today, my 0-day level is garbage. His 740 level hit. I had a level of 756, had a level of 750, and the macro news just can dominate dealer flow too. So we got to be aware that Gamma is one tool of the market. It is not the end all be all. You can have just, spot buying and spot selling come in and overpower all of that. So I'm tending to find Gamma to be more useful in environment where there's not economic news. So if you get economic news, then you're going to get underlying order flow, and the dealer's going to have to chase. He's going to bust through his gamma levels like we've seen today, and he's going to chase the move down to what end? Where does it stop at? So some of these are questions that I'm going to try to at least talk about. And so I'm going to stop right there, ask anybody got any questions. If anybody wants to ask me anything before I go on, or am I talking too fast? Because I do have a tendency to do that.
You're talking on a perfect pace.
Okay. So,
any questions? Oh, I want to say real quick, shout out to AV for the super chat. I see you. Peace and blessings to you as well. My fault. Go ahead.
Okay. So, what's the important thing about gamma? Okay. So we're looking at a gamma chart. My first thing I'm going to be looking at. I'm going to go to. Well, hold on. Let me show you a couple of slides first. AB showed you some slides. Ab showed you some slides. He called me AB, but Ab showed you some slides. I'm going to show you a couple of slides. If you find them useful, that's fine. If not, we'll just go through some things real quick.
Hey, Virgil.
Yeah.
This is a subscription you pay for, this website that you're on?
Yeah, that's Spot Gamma. And I'm going to try to get to that at the end of the presentation.
I was just curious. Okay.
That's just what was on my screen when I shared it. And I will go through that and show you guys that, because that's going to be a powerful platform to maybe harness the power of 0-day expiration trading, which is going to be even bigger now. And Robinhood is going to, that the whole market is going to be allowing people to day trade. I imagine that 0-day option flow is going to be huge. So I'm going to look at that, and I'm going to try to walk everybody through maybe a theoretical trade we can make towards the end of the day using 0-day TE, 0-day options. I don't want to bore everybody with the technicals of how it all how Gamma works, the buying and the selling and the puts. I just want to show you how I use it. Then maybe you can, if you really like it and you think it's something you can add to your arsenal, I would highly recommend understanding the mechanics of it. And it's taken me a while to understand the mechanics of it since Ab first introduced it. And I still have notes. I still go back. If I'm looking at dealer hedging, I'm looking at, my notes. Okay, what is he supposed to do? And I'm constantly running through these thought processes. So this is going to be one step above trading your normal chart. This is what they're going to be, what I would call second order thinking. So, you're thinking if then, it's just not if, but we're thinking if the dealer is this, is long, then what is he required to do? So it's going to require a little bit more patience with yourself, a little more writing it down, working through it. But I really promise you that hedging is probably 60% of the market right now, at least a spot. 60% of the time, you're dealing with the dealer, and he's hedging overnight. A lot of my best trades happen in Asia session, where the Asia market doesn't have the power to go up against the dealer. They might try to push it in an extreme way, and it hits a pull wall, and it rebounds. And you can see that. You can see price come way down, hit a pull wall. You say, and it'll recover, because Asia doesn't have a lot of times have the juice to push the market all the way, through. Like you see today, we opened up and we got the jobs report, and we pushed through all the gamma levels, and we went all the way down to the pull wall. We had maybe one of our biggest moves in a long time. And I do want to point out today is Friday, so we have a lot more gamma exposure today. A lot more hedging flows happen on a weekly expiration. Your hedging flows, weekly expirations, monthly expirations, quarterly expirations. These are huge days in the market where we have a lot of dealer influence. Not every day is going to be a huge day of dealer influence. Some days is going to be just fundamental flows. And so as a trader, we still want to be paying attention to our break of structures. And those are, probably the most important thing is structure. And then we're using gamma and pull walls and call walls to confirm or kind of act in confluence with how we already anticipate the trade. Okay. So right here on this chart here, it just talks about how much the options market volume has increased 150% since 2020. And it makes up, just a huge portion. I think I heard like 60% of the daily flows are a lot of times are options. So, what you're trading on, or what we're trading on the stock, on the chart, a lot of times, there's a whole nother market, the options market, that's trading right alongside of it. Sort of like, you ever seen Stranger Things, where, you got the upside down world, and they're over there, and you're over here, and we have, two different things that are interacting, and you just don't quite see it. So that's kind of important. I don't know if anybody knows this, but Black Monday, one of the things they talk about was the options market helped cause that crash. The equities dealers didn't even realize how big the options market had got back then. And when they started having to get, redemptions and all this stuff, it just kept cascading. And so this is kind of a reason why we need to get into understanding gamma. And so what I aim to do is I'm gonna try to simplify it and just show you how to approach it and how to think about it, maybe how to trade it. And so let me go to another slide here, see if any of them are interesting. That's VIX. Okay. So let me find a couple good ones here.
While he's doing that, this was the worst drop that we experienced intraday wise in 4 months, dropping almost 2%. NASDAQ dropping way double that, 4.7%. It had its worst week in 14 months, the NASDAQ composite.
So why are put walls, why do they act like support, and that's one of the things that, I really want to understand, so a lot of people may be short those puts at that put wall. And when they get in there, that's their TP1, that's their take profit. So they're taking profit, Now, and sometimes in a negative GEX environment like now, people are adding to their winners. They're taking more shorts. So we want to be aware of, are we in a positive gamma environment or a negative gamma environment? A put wall in a positive gamma environment is going to be a much stronger support zone than one in a negative gamma environment. Okay. One of the things you can look at is as you approach your put wall, do you see put walls growing beneath it? Are there people buying puts further down the chain? Is that open interest growing? There's some services I'm gonna look at. I'll show you maybe how to see that call wall. If you're approaching a call wall, and, you know, we're in positive GEX and you're approaching a call wall. Is there another call wall above that call wall that's growing in open interest that we might continue up? So that's kind of a deal, you know, and the deals are always hedged in some form of way. They're, you know, unwinding and winding their hedges and stuff like that. So that's kind of, you know, that's kind of why we use put walls. And I've used put walls now with great, what I would say, with really good results. I've been, you know, really not even been buying anything unless I can corroborate it, you know, with a put wall, a structural point, inverse fair value gap. Then I'm buying, you know, and I'm putting this, you know, stop loss. I know I'm running a lot of information at you guys, but I got a lot to share. Another thing, another quick topic, gamma. As you approach a gamma level, you can kind of, now gamma levels are a good support too. They could be a good support because the dealer doesn't automatically want to just go through a gamma level unless there's a really good volume behind it. Okay. So a lot of times what I see is how we approach the gamma level can tell you about if it's going to hold or not. If we approach it from a long way out, like I said, in China overnight, you know, and price is stretched, you're probably going to get a rebound. But if you come up to that put wall and you start consolidating and creating structures, order blocks and stuff like that to help, they almost like a staging area. You almost see a staging area in front of your gamma zone sometimes, so they can kind of have a place to reload. So it push down to the gamma zone and to come back up and then reject. We actually seen the exact same thing today on SPY. I'll show you. Let me just back out of this real quick. Now I was just saying, I'll show you that. We've seen that on SPY today, or I probably got it on ES. We see right here, they came down, they create this fair value gap, and they broke below that 750 put wall. But guess what? When it came back up, they already had it staged. It was already ready, locked and loaded to push right back down. Right past that 750 put wall, all the way down to the 740 area. So you can kind of see what we got down here. We consolidated. And then you would have known you got this whole fair value gap, bearish fair value gap here that was going to, you know, be a reloading zone for whoever was going to push this lower. They already knew what they're going to do. I mean, you know, I see it so much. As retail, we're kind of in the dark, but the dealers and the big boys and the banks, they definitely know about all these levels. They're paying attention. They know all these levels. You know, so that's how important it is. Let me go back to the slideshow. Let's see here. And I got a lot of stuff. I'm not gonna try to share it all with you. I'm just trying to get to some of the things that are most important. Okay. I was going to, you know, talk specifically about gamma, but I want everybody to realize that the dealer, he's going to hedge in multiple ways. It's not just gamma. Gamma is probably the biggest influence in the midterm, like a 0-day or even a weekly influence is going to be gamma. But there's going to be hedging dynamics like Ab just talked about on a monthly expiration, okay, on a weekly expiration or quarterly expiration, and those are going to be volatility instruments. So we're going to be talking about Vanna, the dealer hedges with Vanna. So these are just terms. I don't expect you to understand them right now, but I'm just trying to introduce you to Vanna. We can go ahead and look at a chart on SPY. I can show you on quarterly option expiration, how the market changes. Like you said, when all those contracts roll off, the market might just change. If you have, we all know about the VIX. If the VIX says, say the VIX comes down, prices usually go up. Well, that's a reflection of VANA. VANA is the second order derivative. These are called higher order derivatives. And then on a very short-term basis, the most powerful thing is charm. Now, charm is the second order derivative of theta. And so charm is real important at the end of the day. And this is how we can make a lot of money on zero-day options, is knowing how to harness charm. It's because charm is where the dealer is going to roll off those hedges at the very last minute, that last 15 minutes or 5 minutes. That's the dealer getting rid of balancing his book. He's trying to be done. So all the open expirations, people are selling them. They're trying to get a little bit of money they got left and closing out. That's charm. That's theta decay. Okay, so that's what that's going to be a bigger influence now that we have these daily. We have this deal where we can trade as much as we want, where they're getting rid of the pattern day trade rules. So charm is I think is going to probably be the biggest hedging thing here. I don't know, can you guys read this? Let me load this up. So here's delta, and this second order derivative is gamma, and then you got theta, and this second order derivative is charm. Okay, so that's charm is how theta decays and how that, so if the dealer is holding a hedge and it starts expiring, he could potentially be gaining, like say he's holding a call he sold and it starts expiring and the call is out the money. Now all of a sudden he's gaining money. He's becoming delta positive. So he has to sell to offset that. So theta is kind of like the hedging for the charm is the hedging for theta. Okay, then you have VANA, and that's the hedging for Vega or volatility. So VIX contracts.
Can I ask a question, Virgil?
Yeah.
And it's similar to what Jelly put in the chat. So is charm something that we see towards the end of the day?
Yes, at the last 15 minutes, or even at the end of a quarter. At quarterly expiration, you know what I'm saying? So if the dealer is long a bunch of hedges, if he's long a bunch of contracts, he might have to, offset that, because if you ever sold a contract, let me put it like this. Okay, we all buy contracts, and we all had contracts go to zero holding theta. Okay, we've all had theta work against us. Well, the person who sold you that contract, theta's working for them. You see what I'm saying? So the dealer could be.
So is our theta their charm?
Charm is a second order. Charm is the gamma. Charm is just like gamma, but for theta.
Do we see that, or we just see the experience? Is something that you can look up, or you just see the effect of it?
I've only found one website where you can see it. Now, that's Spot Gamma, and I'm gonna show it to you guys.
I never even heard of that. That's fascinating.
So as that options contract loses value for retail, it gains value for the dealer, and the dealer has to do something. He still has to hedge that even. Okay, especially if it's at the money, right at the money, he has to hedge that. Now if it's a contract that's way out of the money, he's not that exposed. If it doesn't have that much delta is not going to change that much with theta decay. Also, and I'm running a lot by you guys, so if you want to rewind this, but VANA or Vega, that's the main Greek that takes in charge of FOMC meetings and binary events. You're going to see VANA take the reins. So these are the three different ways the dealer is hedging. He's hedging delta, he's hedging theta, he's hedging Vega, and I'm gonna show you guys something real quick on Vega. How big Vega is, VANA is. I'm gonna show you how big this is. Let me go back here real quick. And we can see this easily on SPY. Now my SPY chart's probably a mess. Maybe I should do something else, but it's not that bad, actually. Okay. Okay, so if you notice right here in April, this was a quarterly expiration. And so a lot of the exposure the dealer had at that point expired. They were able to reset their positions and volatility came down, and that's why you had this happen right here. Now I put a post up in the Discord that kind of explains how options expiration allows the dealer to reposition and allows a lot of that volatility to come off the market, a lot of the volatility to reset, and that's why we get this big move. Heck, even during the initial war phase, even we saw the market start to recover because volatility came down, and as volatility comes down, then the dealer's hedging changes and price is able to come up. And as price comes up, guess what? Then gamma, the gamma effect kind of takes a hold too, because we're excelling through these negative gamma areas. So it all kind of just works together. So you really want to be paying attention to quarterly expirations and what the volatility is around here. Is the volatility decreasing? Is the VIX decreasing? That allows prices to come up. Okay, I don't want to get too far in the woods. I'm just kind of explaining the mechanics of it. And you can see the same thing happen here this last April. Right there is April. Those quarterly expirations are big expirations. And then everything resets. And that's why you see this happening in September, in July, and these big quarterly expirations as the dealers readjusting. Okay, I'm trying to get to some easy material so I can. I don't want to look at that too much. Okay, it's called resistance. We already kind of talked about put resistance. This is the same thing. Dealer has to hedge against it, keep their book balanced. If you see any slides you guys want to look at them later, I'll put them up in a chart. But I'm really kind of trying to get to the actual platforms I use. But before I do that, I want to show you guys some stuff. Okay, now this is important. Gamma is always the highest at the money at the closest expiration. That is where the dealer is most sensitive to changes. That's why those 0-day TEs are so powerful. That's why you can buy a 0-day options contract and have it, explode one way or the other because of gamma. Because they're required to hedge that right now and then. They ain't even worried about next week. They're worried about right now today when they leave the office Friday that their book is clean. They don't want to be upside down, so they're hedging right. So, even like a deep in the money contract doesn't have as much gamma as an at the money contract. A real out of the money contract doesn't have as much gamma as an at the money contract. If you buy an out of the money call as the price comes towards you, then your gamma increases. That increases the value of the contract. So here's this is a good, can you guys see this? Can you guys see this chart? Everybody see the chart?
Yeah, we can see it.
Okay. This shows you right here, out of the money. You see gamma is at the highest, as high as at the money. This is where they're required to hedge the most. Delta at the money is 0.50. So if you imagine everything on the side of this curve is this is 0.50 right here. If you can see my arrow, and everything coming down here is 0.40, 0.30, 0.20. That's how that works. That's gamma. Gamma is the highest at the money.
This is good, Virgil. This is real good.
Okay. I hope so. I'm not. This is my first time doing this. Really trying to tell everybody what I know. And it's a lot.
You're doing great, my brother. You're doing great.
Okay. Right. And so right here, gamma is strongest as expiration approaches. So like I said, at the end of the day, the dealer's really trying to pin that price in the level. Only thing that's going to pull that price off that level is charm. That's the only thing that's going to pull that price off the level is charm. Okay, at the end of the day, end of the week, He's trying to pin that. So that's what happens. That's what's going on. That's why you can get these huge, that's why you see these people, and this is where I want to get to, where I could buy an SPS contract at the end of the day and make $5,000 off of it. Because, like I said, I'm a kill zone trader, but a lot of times my kill zone is right where I'm at work. 8:30 starts, that's my job starting. I can't trade it. So I want to play open range breakouts and stuff like that, but I don't have the time. So my next goal is to really try to lock in on the end of the day and try to catch the dealer unloading his hedges. And that's where I'm aiming for, and that's what I'm kind of trying to show everybody. Is it 3:20? Did the market already close?
Yeah.
It did, huh? Damn.
I thought you were gonna do futures. I would have told you.
Oh man, I missed it then. Well, maybe we can rewind and kind of look and see. When I go over the spot, I was gonna try to show you guys charm. I can still show it to you how it works. But it's been so much better in real time. These are the symbols for delta and gamma, call options. If they sell, like Ab already said, they sell you at the money strike is going to be, delta is going to be 0.50. They're going to hedge that by buying 0.50 share, buying 50 shares or whatever. We don't need to go through that.
You're getting back to Virgil, not to cut you off.
What'd you say?
They're catching along too. They're in the comments saying how they're fully focused.
Okay. All right. Okay. So another big thing is I use a lot is gamma by volume. So you can have gamma by open interest. So open interest is going to be how many contracts exist at a strike. Okay, and that's a stat. A lot of times it's kind of a static level. You're looking at a contract that has 7,000 open interest. But volume is where the trade is actually taking place. It might not be at that strike. The highest open interest strike may not have the highest volume. It may not be where the most activity is taking place. Like I said earlier, they could be building a call wall further out, and that could be your, or one closer to you. You could be looking at a call wall, say at SPY 750, and say, oh man, that's my target. Well, they're actually building one at 745. Okay, and they're abandoning the one at 750. And you need to be paying attention if that call wall is coming back towards you, that's bearish. So if we're looking at trying to see how our call walls are migrating, our put walls are migrating, our gamma levels are migrating. These can give us an indicator to which way the market is leaning, because what is options besides the prediction of the future? The whole game of options is try to predict the future direction of a stock. So that's what we're doing. If you're buying stock, you're just an investor. We're investing. If you're buying options, you're trading. We're not pretending that we want to own this thing, unless you're buying a leap or something. But so that's gamma by volume. I could post it.
Hey, Virgil, I have another question if you don't mind.
Okay.
When we see price really, I'm looking at SPY right now and it's falling after hours still, is that gamma still in effect or some other variant that's now forcing it to even go more in a certain direction?
Well, I haven't got to look at it. I haven't looked at what I would do. And I guess we could do is look at Monday and look at Monday's gamma levels and where the call walls and put walls have migrated to. And we can look at next week's levels and look where the call walls and put walls have migrated to. Today, I want to say something because we kind of got on it inside the Discord. Today was a very good example of when the dealer is not trying to defend anything. They had already had this in mind. And I know because I told you the call walls and put walls were very close together yesterday evening. And they had the call walls and put walls close together. That's a very compressed range. That means a breakdown or a breakup is going to explode. Because they took everything, they smushed in as compression. And that's what you seen yesterday. They said, man, price ain't moving. Well, they was bringing those call walls and put walls in closer together because they were trying to mitigate their risk. They don't want to be way up here or way down here. They already knew the job report was going to be funky. You know, they knew it was going to be big news. They had already positioned this move in advance. So that's very thing that I've seen this happen so many times where that call wall and that put wall and that gamma level get real tight. And they get real tight. That's when you really better be paying attention. They're about to pull a rabbit out the hat. They're about to try to jam some people up. You know what I'm saying? Because now, guess what? You know, that call wall, it ain't even nothing. Nobody's even defending that. They like, oh, we don't even need to worry about putting the call wall up there. We're going this way. You know what I'm saying? Or that put wall is right there. They said, oh, we're going that way, you know? So they built that. That was built in. This was a planned sell-off. It wasn't, you know, just next time anybody that's doing this, when you see your call wall, put wall close together in your gamma zones, you see that all compressed, know that, you know, that's what's happening. So I will take a look and see. I haven't, I've been kind of just watching you guys'
Yeah, I don't want to take you off whatever
Okay.
you were going to do. I was just curious if it
Yeah.
still had the same effect after hours.
Yeah, it does. I mean, what we need to do, what I got to do is locate the next put wall. But now the next put wall is going to be a negative gamma. How do we know that put wall is going to hold? You know what I mean? You don't. All you could do is watch how it approaches the put wall, and you know, any you could possibly take a trade off that put wall, you know, counter trade, but you just want to take it right back up to the next what would that be? Next higher low, next lower high. You know, you don't want to try to break structure off of it. Let that be for somebody else. You know what I'm saying? You just take it back up to your moving average or your ATR, because all the moves are going to be explosive. All the displacement is not going to grind. It's going to boom up or boom down. You know what I'm saying? So
Yeah, that's good because positive gamma environments grind.
yeah, they grind, but the negative gamma
Negative ones don't.
displaces. Yep. And a lot of times what I'll do is I'll go to the true day open and I'll drop a
Okay.
VWAP on it, and you'll see the lower highs just right off the VWAP. So, and I talked about this, how Greeks shift around FOMC and how Vega becomes dominant and theta and gamma and delta. So we want to know as you progress in your trading, you want to kind of get familiar with how options are built. You know, Vega is also dominant on earnings. You know, that's why when you get this earnings crush, you know, because you know Vanna, you know, if you have a really high premium because Vanna is so expensive, you know, right on earnings, people are paying these huge premiums, or even MU, or even Dell, and all these things people are rushing into, which breaks my heart because I'm in another group and people are just YOLOing into this stuff, and I'm like, these premiums are huge, and what does that do? That attracts call sellers. People are coming to sell those calls. They want to collect that premium. You know what I'm saying? And enough people, you know, start selling calls that's bearish. When you know what I'm saying? So when you sell a call, guess what? The dealer buys that call, okay? And then to offset that bullish position, he sells. He has a sell. So I mean, in order to keep overcoming that, you need fresh buyers coming in. Fresh buyers need to keep coming in. Those call walls need to keep getting built up further and further. So anytime these,
I'm sorry, Virgil. I have another question. This is just so fascinating to me. I promise I don't want to take over.
I got one too after.
Go ahead.
So, based on what you're saying, we can't really, when we look at an options chain and then look at like the open interest, that may not be telling us directionally where the interest really is, because it could be, like if we see a bunch of open interest on calls, it could be a hedge because dealers need to neutralize their risk because they might be, maybe they're over leveraged to the short. So like I guess what I'm trying to say is like the open interest based on what you're saying and how dealers have to stay neutral, it may not be an indication of direction.
Yeah. So yes. Open interest. I'm gonna say this: open interest is gonna be more powerful the closer it is at the money. If it's very far away and people are buying, you can have open interest at a strike way out. People buying lottery calls. The dealer doesn't have to worry about hedging it because the delta is so low.
I see. Okay.
You know what I'm saying? I'm gonna show options IO here. And this now I got two services, two different services that I use, options IO and Spot Gamma. It's expensive. I'm not even gonna lie, it's expensive.
Yep, tell
But why I'm doing it is because I at least want to know. I at least want to just take a few months and know what and understand the dynamics of what's going on behind it. I may not keep it forever, but if I do good, I may keep it. You know, I'm gonna try to give me a Black Friday deal. Options IO is not that bad. It's only like $500 a year, but Spot Gamma, I'm about to get that on a Black Friday or something. You know what I'm saying? But also the sniper's dashboard is good. I mean, good gamma levels right there. It's not going to do the whole market, but you know, for SPY, you know. So let me pull up options IO, and we can look. Let's look into next week and kind of see where they might be building the put walls at. So what I would do here is we're at 608. I'm gonna go over here to options charts, and I'm gonna go to gamma exposure. Okay, and it's going to give me. I'm looking at GEX by open interest. So you know these are our highest open interest for 608. Okay, so we're below the put wall for 608. So right here, the dealer is not even there's nobody positioning. You know, a big. Everybody's just buying puts probably, and that's why you see it we're pushing below this area. So I'm you know, that's Monday. It's not telling me a lot. It's telling me we're in negative gamma. So what I'll do here is I'm gonna look by volume. What are people buying? Okay, so today people were buying. This is what I was telling you about gamma by volume. People are buying at 395. They were buying a 395 put. So you know, are they gonna keep that 395 put? Oh, this is gold. No wonder. Sorry. I'm sorry about that. No wonder why it looks so terrible. I'm like 395. That's way down there. I was like, dang, I ain't got no explanations on the market.
I'm just looking like, wait, what? What?
Yeah, I 395. I'm like, all I do is trade. All I trade is pretty much only thing I trade is gold. I don't trade SPY as much right now because there's so many participants in the SPY, and the gamma levels are. I want to take you over to SPY gamma. You'll see. But I want to tell you guys this specifically because like I didn't know this. So you got gamma being hedged in the SPY, and you also got gamma being hedged in SPX. And SPX is a larger market. And sometimes the hedging flows from the SPY is different than the hedging flows from SPX. A lot of times they're different. And they're hedging them way differently. So SPY Gamma, they combine the two and give you one one hedging flow for both of them. They call it the SPX complex, where they take SPY, SPX, and even ES options, and they put it all together and say this is how this is being hedged dynamically, all of these together. Because if you're just looking at the SPY, you're missing SPX. And SPX is huge. And that's where the institutions are hedging. But the SPY is still good though. Don't get me wrong. The SPY, just using SPY, I've used that a lot. But I do gold because I know who the players are in gold. I know London is the bullion capital of the world. They're the bank. And they kind of set the tone for the day. I see gold sell off in London. It's probably gonna sell off the rest of the day. In Asia, they can't work nothing. They just, whatever they do is false. And then the United States is the second biggest market. And they kind of just, them and London kind of work together. So I just try to get in gold when it's mispriced. It's harder to do with SPX and SPY because it's so liquid and there's so many counterparties. And there again, when I need to be traded, for me is kill zones. I'm at work, so that's why I don't participate in SPY as much. But anyhow, let's look at SPY. Okay, so we're gonna go open interest again. I'm just gonna select the Monday. Okay.
So he's learning so much from you. This is fire.
So the call wall and the put wall again, like right here on Monday, they're both at 740. I don't like that. Well, I ain't say I don't like that, but that's a recipe for the dealer's not. He's not exposed either way. There's no, I'm gonna catch it at the put wall. I'm gonna catch it at the call wall. 740 is just the level. You know what I'm saying? And people want to trade around that. So and we're below the gamma flip. So we possibly come back up. Test this gamma flip and push back down. The biggest. It's all negative. Let's look about volume. Let's see here about volume. $740, y'all, across the board, 740s. I mean, that's just telling us that it's going to be volatile one way or the other. Let's go for the week. Let's look at it out to next week. That's Monday. That's Tuesday. That's Wednesday. That's Thursday. That's Friday. Okay, so our put wall's at 735. Now, this is by volume. Hold on, that's wrong. That's by volume.
Get one. It got knocked.
Yeah. We haven't even established a put wall, which tells me they're not just buying any particular put. They're not saying we're going to stop here. They're just trading it. We're below the gamma flip zone. So, you just got to be bearish here until it's proven otherwise. Of course, Trump can say something and it'll be the exact, opposite. I want to show you guys something for say what I like about this website is.
This is what the volume, right?
Yeah, that was the open interest. That was volume too. When we go back here, let's go back real quick.
This the broker though that I was talking about. This the website I was talking about when I was doing my gamma thing. That's the one that you showed me what the volume is. The first time I ever seen.
So you can see open interest on the weekly. You got 2 billion in get 2 billion net gex. A lot more negative gex than positive gex. If we compare that to Monday, how much is just Monday? And the reason why I'm saying Monday, because Monday is the closest expiration. So how much of that is Monday? We see the weekly expiration is a lot larger than Mondays. There's a lot more happening on the week. So I would defer to the week since Monday is. I don't like it when there's no put wall because it's not. That means there's no lower bound here. There's nothing here to say we're going to reverse from. This is going to keep going until somebody. There's a limit to gamma and dealer hedging too. It's just another tool in your arsenal. It's not going to give you all the answers, but it does help predict. A lot of times where the turning points are, what's valuable. A lot of times I'll have a bunch of order blocks or fair value gaps marked on my chart, and I'm like, which one actually means something, So I'm able to go look at the gamma levels and see which ones I should really be paying attention to. I still got everybody here? Okay.
Yep. Lucky is.
All right.
Yes, sir.
Definitely be rewatching your section. She loves your edge.
Okay, so implied volatility, not too bad. Option volume, so you can kind of get all this. When I was looking at MU the other day, some of these levels were this was over 100%. It was like a crazy amount. Like I wish I had 100 shares. I would be selling calls. If I had 100 shares in MU, I'd be selling. You collecting $5,000-$6,000, out the money. That's the game right there. That's where the real money is.
Facts.
Sell
to gamblers.
Yeah, you take the other side of the trade, you take the house money, and if they call your shares away, you get the appreciation. If you sold, say you sold MU and it was at 1,000, and you sold it out of the money call say at 1,500 and it goes to 1,500, guess what? You get that 500, you get that $500 appreciation, you know, and it minus, you know, whatever you sold the premium for, but you still get that appreciation that you sold it, you know, that the difference right there. So selling calls is really a powerful strategy. I've only ever done it once on NVIDIA because I normally don't have 100 shares of anything. I'm not that wealthy where I got 100 shares of something rocket, but you know, I'm just throwing that out there.
I like how you put you're not that wealthy. So how wealthy are you?
I'm not as wealthy as Rams, but you know, I'm getting I'm not on the Traps level for sure. But you know, a lot of my money has come from work and just grinding and saving. I haven't options has been nothing for me. You know, like I should have never done it. Like I don't think people understand that the deck is stacked against you anyway. And then if you introduce theta decay and you introduce spreads on a lot of these calls and premium and not knowing volatility, and I see, and I'm not throwing no shade, but I see sometimes some of these other groups, people buying right up against the call wall. They're buying options contracts and IVs through the roof, and they're right up against the call wall. You know,
that's my question, Shot. That was my question, not to cut you off.
What?
I wanted to ask you if you could go a little more in on that because you said something powerful. Most people don't know nothing about your IV and your Vega, like your bonus money. So like they might see the contract and think that it's cheap because it's they can afford it, but a lot of people don't look and see that this IV is at 100%. So when their contract doesn't move, but I mean when their chart doesn't move at all, but their profit goes down to 10%, they're lost and they don't know why they're losing on the play. It's because you said that they're buying when the IV is extremely high. So I was gonna just ask you just to go a little deeper into what IV Crush is.
Okay, so I'm gonna show you right here. First of all, look at MU right here. I know we're gonna be wrapping up pretty soon, but we look at Mike. God dang, I didn't know it. Dang.
Levine, not really. It depends on the catalyst. If it's high, you want that catalyst to stay.
And the IB is still high. I mean, look at the IB on that. It's 103%. You know, and I don't know. A lot of people don't know this, but like I'm in Spy Gamma's Discord. Yeah, these people. There are people out there, whole groups of retail traders, institutional traders that are foaming over the mouth to sell calls Dell and sell calls on MU and sell calls on this stuff. They want to sell calls on it. They're not interested in buying. There's a lot of people not interested in buying the call. They're interested in selling the call. You know, which kind of threw me off at first. I'm like, what? Why you know, like the way they talk over there, and I'm like, what? I don't understand. Like, but yeah, they're selling this premium. So when you buy something like this, you need to be looking at the historical IV. What's the IV been, you know, in the last 30 days? You know, let me see if I can bring it up. Historic IV. So, you know, is it high relative to the last, you know, year? Because the premium in the options has multiple parts to it. You know, some of it's theta, not all of it's delta. The other parts are, you know, Vega and all that. So if you're buying Vega when it's high, when the Vega comes down, then your options loses value because you're paying for the volatility. You're paying up for volatility. So there's always somebody that wants to sell you that volatility. Iron condors and stuff like that. There's a lot of option strategies that by again, a lot of people they just want to profit off of volatility. They're not even trading direction. They're not trading up or down. They're trying to harvest volatility. You know, so a lot of your call spreads and things like that, they're trying to harvest volatility. I think maybe that's really a big thing in the market. A lot of retail we don't really use well is profiting from volatility. You know, But like, that's 100% right there.
So you're overpaying basically.
You're overpaying. I mean, especially on an earnings call. I mean, once the volatility drops. Let me see. And I didn't really want to get into I don't want to get into how they hedge, because the only reason why I didn't want to get into how Vanna's hedge versus Gamma, because I don't want to confuse anybody. Because Gamma, the dealer's going to hedge Gamma in a certain way. It's going to be a different way they hedge Vanna. Vanna would be in Gamma. These are two different higher order Greeks. These are two different hedging requirements. And like I said, sometimes Vanna is going to be the main thing they're hedging. Sometimes Gamma is going to be the main thing they're hedging. So when VIX is high, they're going to be hedging a lot of Vanna. When VIX expires, when the VIX, if people don't know about the VIX, it expires, once a month, and they got to reset all those positions, and that has an effect on the market. Volatility may come down or go up depending on how the dealers hedge there. You can look at the Gamma levels on the VIX, all that. But anybody that wants to learn about that, let's say a lot of people bought calls. They bullish on NVIDIA, Micron, right? So right here, the dealer, they would short those calls. If I'm buying a call, then the dealer short that call. He's short this call, right? So what does he do? Implied volatility's up, everybody's buying, he's buying stock, he's still pushing it up. Okay, this is a volatility trade. This is what we see happen a lot of times up to earnings. We see that price run up and break structure before earnings because the dealer is being short calls and he's required to buy stock, and it's kind of fueling this move up. Okay, and this is a banner trade. This is the volatility going up. But then once earnings are released, the volatility comes out. The implied volatility comes out and the stock drops, unless it goes bananas like Dell did or whatever, and they crush earnings. Then they have to buy even more because the implied volatility stays high. But at some point, the implied volatility is going to drop and it's going to take the price with it. It's just going to happen. Nothing can stay. There's always a last buyer. Everybody's trying to fit into an elevator. I mean, sooner or later, the elevator's full. You know what I'm saying? Some people going to have to get off. So you always got to be careful with those crowded trades because there's always going to be a last buyer. There's always going to be a last, it's just, you're chasing. You know what I'm saying? So you buy at your pullbacks, at your prior. When I went down to the Freedom Center, and I think that was one of the most important things I was able to get into alignment with the track was that when he bought at a prior all-time high at a pullback, you know what I'm saying, and a reclaim. So that I'm okay with that. But in some of these situations, we shouldn't be buying, just because it's high. You know what I'm saying? We need to buy at the appropriate level. We need to look at the candle. I've seen them buying as an inside candle. It's a bearish opinion. You got a big tall white candle, you got an inside candle, and things selling off. You're right at the call wall. That's why I stopped right there. The put wall is at 180. This 40 points back. You should be buying the put wall if you're gonna buy it. You know what I'm saying? Let me stop here. Okay, on that. All right, I'm gonna just go over Spot Gamma real quick and kind of show you guys that so you can kind of see some things. I'm gonna show I'm gonna show you guys one more site I got, and I'm not gonna be on this site long. I've been trying to really build a mental framework of Gamma because there's so many different Gamma levels. I got access to 3 different services, and sometimes I get 3 different Gamma levels, 3 different GEX levels. Sometimes they're all the same. But what's important, what really matters in the markets, you know what I'm saying? Open interest. And I could go through all of this and show you guys about open interest here, like say a Micron, we can look at open interest. Where's it at? Gamma, expected move, option charts. Where is open interest at? Oh, right here. I mean, look, that's all red. That's all negative open interest. That's for next week. Let me be fair and do all the expirations. Okay. Man. I mean, you see, it's all red. Those are all puts. All open interest is red. I don't know how it went from, that means everybody's selling. Everybody wants to get out of this thing. You know what I'm saying? We can go to the gamma level. Where's the put wall at? Put wall's at 850. Where do we end up today? 872. And we ended up, so you're right at the gamma flip zone. Put wall's at 850. So I mean, that might be a place, that might be a good place to enter if you're going, I would pull up a chart and see if there's anything that lines up with that. Start out the weekly. What do we see? 850 right here. Look at that. You got a gap right there. You got the 850 is the that's the 20-day moving average at 850. Football's 850. We'll go back over here. I'm having a hard time here. Where did MU go? I just had it up. That's crazy. That whole thing just. I'll just pull it back up again. So okay, so we go here and we just put the put wall here, 850. I'm just doing generically right here. That's 850. That's 850. Okay. And then we go back, and then I think the gamma flip is at 861.78. Draw another line, 861.78. I can't believe that's right there though. 861.78. All right. All right. So that's where, I'm not even gonna put the call wall on. I guess I can. Call wall is at 1,000. So then, then we turn to the chart masters and we just kind of examine the structure of that. That's on the daily. I mean, so I guess you would be looking at, so right now you're at the gamma flip level. You have the gamma flip level. I would not expect this put wall to hold, primarily because this is where my path is right here, prior all-time high. And so I would be like 815. Even though there's a put wall here, you might get a little bit of a reaction here, a little bounce. It's possible because this candle right here, this Marabouzu candle, that's the institutional candle right there. If they want to defend that, that's why that put wall is there. But that's also a new week opening gap in there, right in there too. So, that's what that's all about. So, I mean, that's just put walls and call walls right there. Let's go over here to spot game so I can stop get to everything here. Do I still got everybody? Are we almost done here or what?
Yeah, I think we're just about wrapping up.
Okay. All right.
But
I was going to show you guys charm here, I guess. Maybe now spot gambling got a lot of features to it. I could go to MU and show you some things. Oh, here they got equity hubs, but we're just going to bounce over here and kind of look at gamma and charm real quick. Okay, so this is they have it to where you can rewind the whole day and watch your gamma levels. Okay, let me walk you guys through this real quick. This area here, all these here are strikes. Okay, the right side. Let's go here. The right side of this is these are where the dealer has bought calls. The orange is calls, and the blue is puts. He's bought. This is the dealer's positioning, not the market, but the dealer himself. This is where he's bought calls and he's bought puts, and this is the net open interest. If it's if it took all the puts and calls, this is his net positioning at this level. So now this is 0-day TE. I got this switch toggled on to 0-day TE right here. You can go right here where you can have all the strikes. You can go to the 0-day where it has some of them. And so this is net open interest here. So that kind of tells you where areas of interest are. And these positions here, like per se, this position here is going to be rolled off because we're not even nowhere close to that. But I'm going to go to GEX. All right, so we can see we opened up the day and our gamma exposure was already like concentrated. Normally these are all the way up and down through here, but they were already concentrated here because they knew they were going to either buy up or sell off. So we're going to kind of, let me explain one more thing too. These areas of blue, they got the call wall marked here. You got your hedge wall right here. Call walls are areas of positive gamma. In the red are areas of negative gamma, positive gamma, supportive. You can see these blue strikes here represent that well. Okay. The other feature about this, other good feature about this is, and I'm just going to run through this real quick because we're running out of time, but other good feature about this is where you can see they have a delta pressure. This is called a heat map. Actually, this is called a heat map. This whole thing's a heat map. It's like a weather forecasting map. You can see the rings where if it was a storm, it'd be more concentrated in the red areas. You got a higher tornado right there. So this is a heat map. It's sort of like a weather map. And so, but they got 3 different maps. They got the gamma map. They got the delta pressure map, which I like a lot. This tells you where all the selling pressure, red is selling on the delta map. This is all selling. This is all buying to start off the day. So this is our delta pressure. We see price come up here, it's going to reject. This blue line is people buying or selling calls and puts right here. This is the hedging flow. This is the flow of hedging right here. Okay. And then our final one is the charm. And so the charm, the red is going to be areas where they're going to be drawn to, and the blue area is going to be areas they're going to be drawn to. Now, what happens most of the day is that price will get right up over here in this area, and it'll slide in between a red and blue area. So this is how I've seen this happen. I've missed it a couple times, so Rob Hood screwed me over. So what I'll do is we're just going to fast forward through the day, and I'm going to show you that just to skip through a lot of stuff. Now, first of all, look how our gamma exposure start hedging down here. As you can see, they start hedging down further down, right? Okay, we're gonna get right up to the end of the day. Okay, right to the end of the day. They have no more exposure here on the gamma. They have nothing else to hedge here. So price is going to slide. You could have got maybe about right here. And you can see this gamma, this positive gamma rolling off. So the only thing that's going to be left is negative gamma. It's going to push up into this area right here between these two strikes. That's my thinking. This is the charm map. Right here. It's going to push up in this area right here. Oh. That's why I fell off the map right there. But you see, it always at the end of the day, you can catch this move from here into an area right between these two zones of red and blue. So I'm not going to get real deep into that because I'm still learning it. I haven't used it a lot. But a couple times I was able to figure that out just by what the largest open interest strike was left, and that's where they're going to hedge in the gamma level. I was really hoping maybe like one day, Ab, that you can kind of look at this because you probably be better at it than me because you're really good at the end of day scenarios. But this kind of gives you a charm map to how that plays out. But there's a lot of good things on here. They got have I lost everybody here? Probably.
No, well, at least
Yeah.
probably. I was gonna tell you, like, honestly, you gotta teach about the charm. I've only heard of charm one time, but that was just on a post. I've never actually heard anybody on YouTube, X, or anything go into like even 2 sentences about charm. I didn't even know it had anything to do with theater decay.
Well, I mean, they have to hedge those positions at the end of the day. They have to close them out. So if they're long a bunch of calls or something, you know what I'm saying? Then they'll have to sell stock to get rid of it. It's just how whatever their hedge was starting out at the beginning of the day, whatever remains, they have to get rid of it. You know what I'm saying? They got to get to zero. So at a certain point, they stop hedging gamma. They start hedging all time decay, and that's just like the last 10 or 15 minutes. And that you can diagnose that by knowing where the gamma, where open interest is left and where they're likely to hedge. I mean, it's the couple times I really got into it, I was able to. I mean, I was like 2 for 2, but I couldn't execute it because mechanical failure, Robinhood. The other good thing I like about this, I'm gonna jump back to MU real quick. Just to show you guys something that's really nice about this platform. So they got what they call synthetic open interest. So if we look at a normal gamma exposure chart, it's going to show the whole market's gamma exposure. I mean, everybody in the market. Okay, that's bankers, retail, smart money. There's 5 or 6 different participants in the market. Matter of fact, before I show you this, let me show you that. Let me go back here. Let me show you that one. I'm gonna kind of wrap up. I'm gonna show you something. Go back to the. Yeah. Now look at this. Not only do they have it, I'm just going to dial back, but not only do they have this associated by market makers, they also have it where you can look at the pro customers. This is what I was telling you. There's multiple entities in the market that's hedging. They all don't have the same objectives. There's banks, there's pro customers like this. It's going to give you a different map. It's going to show you where your regular customer retails are, where they're sensitive to price at. It's going to give you that map. Firms, hedging firms and stuff like that, they might be hedged differently than everybody else. So a lot of times what we're seeing on a GEX chart, on a dashboard, on most GEX levels is a consolidation of everybody, how the whole market's positioned. And then inside that, you have the dealer, how he's positioned may be different than what you see with the whole market. So and this platform allows you to isolate that. And so that's what I was going to show you here at the Equity Hub. is a synthetic open interest model. This algorithm they developed is just specifically looking at how the options dealer is hedged. So how he's forced to chase price, not the amalgamated market. So when we was looking at MU earlier, I can zoom in on the 850 strike. This MU gold again. I can zoom in on the 850 strike and see how the dealer is likely to respond. And so you see this, first of all, you see this $1,000 strike right here that we want our call wall. This tells me that the dealer is long here. That means people sold calls, he bought them. The dealer's long. Okay? The dealer's long here at 1,000. So, that kind of tells, that kind of isolates, tells you that the dealer's long in those calls. So this is, likely to be more resistance. They're not going to break through this easy. People sold calls. I was telling you earlier, the premium was so expensive. What did all the owners of the MU do? They sold calls against it. Probably the people who had thousands this year, they sold those calls. So the dealer bought those calls and he had to sell short. And so we go down here and look at 850, at the 850 strike. How's he positioned? How's the dealer positioned at 850? The 850 put wall. Okay, so the dealer is long. The dealer is long at 850. 850 might be pretty good support because the dealer is long at those 850. Customers sold puts at some point. I mean, you know what I'm saying? So you can see, but you can see this area here is pretty much a void. He has no real big hedging strikes from 900 to 850. That's why we see price slide through there. Even our gamma level at 860, it doesn't show up. You know what I'm saying? He's probably not going to hedge that very strong. So it's going to go to 850, and right there is going to be a decision point. Now, this ain't to tell you that it's going to bounce because it's a negative gamma, or it's going to, or what it's going to do. This is just a way for you to understand what areas are important on your chart. If you could find a breaker structure or a fair value gap or a moving average or some other confluence, and hey, you could have shorted from here from 900 to 850. You could have ran a short from here to here. I mean, we could look at SPY the same way. So the dealer's short all this stuff down in here. You know what I'm saying? Because guess what? Why is the dealer short? Because people have been buying puts. So that's why he's short all these calls, all these puts. The bottom here is these are puts down here, and the dealer's short puts because people have been buying puts because they've been pushing the market down. Okay, I don't know, whoever's smart out there, they know. It wasn't me. I think it was Talisha. I know she bought some puts. So that's about it. I'm gonna stop right here for today. I think I ran enough at you guys. I could go longer. It's a lot to chew on and digest here. Anybody got any questions or something like that?
The IV, you only could see it on that website?
Yeah, I can show you IV. Now, implied volatility. You looking for implied volatility?
Yeah.
Okay.
If it's maxed out or not.
If it's maxed out or not. So a lot of your brokers, I know international brokers, they have an IV right there in the historical ratings. That's usually pretty easy to find. It's not, maybe not as as easy to look at, but IV is not like it's not something that's behind a paywall. The only thing that's going to be behind a paywall is maybe gamma exposure and stuff like that. They'll make you pay for that. So,
Carlos, what broker do you have?
I use international brokers.
Carlos, what do you have?
Charles Schwab, but I want to know what's the max when it's too high, when it's too low, where it's in the middle.
Okay, so each option is going to have its own native volatility. And so what they're going to do is they're going to give you a range, say maybe within the last year, over the last 12 months or the last 90 days, how high that volatility is in relationship to that. Because if you look at some utility companies or something like that, they're not going to have a lot of volatility. But if you look at a Palantir or a meme, anything that moves a lot of retail, it's going to have a higher implied volatility on average. Just that's how that stock moves. If it's what's another? Maybe ASTS. You know what I'm saying? It's going to have a higher implied volatility. This one here, you're seeing what you see here. This high volatility point on this chart. This is similar to a GEX flip. Now, this chart here is a synthetic model. When I mean synthetic, I mean this is not the true open interest if they added up all the strikes. This is synthetic. This is an algorithmic driven model where they went out and looked at the different dealers, Citadel, Jane Capital, and those type of dealers that sell options, and they considered it and analyzed their positions and telling you this is how the option dealer is oriented outside from the regular model. So they have a regular model, the total open interest model. It looks like this. Let me see if I can get you a better. So the open interest. So if you went at their total open interest model, it looks more like a standard model, and they got a key strike at 760. They got a hedge wall at 757. This is SPY. So we broke that 750. They got a key delta strike at 720. It means price can do something right there, or it could be a magnet. There's a lot of open interest there. I don't know if I can see it. Let me see if I can see it, Bob. So right here, let me see here. I'm trying to figure out where I can find that. I don't want to get off into the woods on that, but just to say that there's a lot going on right here. If I looked at it and dug through it a lot, there's going to be a lot of hedging requirements right here. That's why it's called a key delta strike, because there's somehow or another the dealer's position or has a. Why is there a line through my screen right there? Is my screen cracked? What is that? You guys see that line right there? Well, I mean, any more questions about VIX? They got a VIX dashboard here too, which is interesting. I don't want to. Like I said, this thing here can go on for days and days. So they got a VIX dashboard, tells you, calls and puts, VIX skew. You can see that at a lot of different places. That's kind of interesting because you could trade VIX all day. There's people that do nothing but trade based on volatility and how that affects the market. I'm not that guy yet. I haven't got that advanced. I do look at it a lot, but I guess one day we can really hammer in on open interest and VIX expiration. I mean, open interest expiration and the OPEX cycle. I was talking to AB about it, and I did put a video out about it. And it's very interesting. It's a good way to understand where the market is. Relative to volatility and stuff, how that works. But I was just trying to really want to kind of show everybody the whole landscape of everything that's going on out there, that there's this whole market underneath the equity market. You know what I'm saying? That's just as big. I mean, think about it. All of us on here, how many of us are trading shares? We're all charting equity market, but then we're trading options market. Everybody got their options chart out, got their highs and lows and their moving averages, but there's this whole structure, this whole thing going on in the background that's at least half the market, So I'm gonna stop right there. I've talked enough. Like I said, people got questions.
That was fire.
I put it all out there as much as I can. There's more.
Bro, you killed it. You killed it, Verge. Wow.
Great.
Anybody got any questions, guys? Because this was phenomenal.
Not right now, but I will in the Discord. That's for
Word.
sure.
Yeah.
So Angie says you did great. She got a page full of notes. I'm so
Yeah.
glad that you recorded so I could watch it 2,000 times. Jelly said thank you. Talisha said, just go ahead and read in the comments. Everybody, I don't see anybody saying they're confused. So I think you did amazing on this, and it was perfect. Now they got enough information to digest for 3 weeks to a month. Virgil, we do a part 2 to this in about 3 weeks or a month. Give you some time to digest it, so you don't gotta rush it or feel overwhelmed. And then you can put everything together, and maybe we keep a live trade. I could do a live trade with the Gamma thing, and Virgil could give us a live trade the way he does it.
Yeah.
As well. So
Yeah, like I said, I really want to get into the charm deal. That's what I think. But I really wanted to show everybody just a practical way of looking at it. I know trying to understand how the hedge mathematics work and what the dealer is doing and all that can be. I struggled with it myself for a long time. I mean, I'll go on a run. I'm asking myself, okay, now what does the dealer do in this situation? What's he doing in that situation? And you just write it down and you continually just keep understanding and learning it. So that's kind of what I got going on. I do want to show people one more thing here. I'm gonna show you guys one more thing here. Now to kind of help if you ever get into it. I know, and this is like this will be the next level after you understand gamma. So I get all these gamma levels. I
Let me use Bookmap, huh?
Yeah.
I was checking it out. They charge a nice penny.
Now you can get Bookmap. I got Bookmap for 50% off. They'll do
Really?
they'll do one of those presentations at the end of the day, and they're like, we're giving it to you for 50% off. So you guys still pay for the data subscription. So like I said, right now, I don't plan on keeping all these tools forever. I'm just trying to figure out what's actually going on underneath the market, like what is actually going on. So what I'll do a lot of times when I'm trading gold is I'll find a gamma level, and I'll find it on my chart. And then in the after hours, you'll see somebody do something like this. You see this yellow line here, this orange line? That was somebody with an order in the books. So price will come up and take out that order. You see that was this 756 0-day TE gamma flip level was in there from yesterday. Overnight, you could have got in. You could have got in, like say right here, at 775.25, right? I had this level mark for something. I don't remember what it was, but you could have got in right here and rode it to the gamma flip and got out. Don't try to get through the gamma flip. You don't have to go through the gamma flip. I exit the gamma flip all the time. I'm not trying to get through that thing. I'm trying to get from point A to point B. And the reason why I know that was a crucial level, because somebody had a order. This red line was sitting in there. And when the market sees that order in there, and it's at a gamma level, it wants that line. It doesn't even, it may not even want to continue up more. It just wants to transact at that level. It just sees liquidity, wants to get it. You know what I'm saying? So if somebody put an order in there, and one of the guys at Bookmap said something that I really stuck with me. He said that's how the institutions communicate with each other. Signal, hey, I want to transact at this level. They'll put an order in the book, at an order. This is called level 2 orders. So they got limit orders sitting there. They'll put an order in there, and they'll sit there on the books. And they're saying, we want to do business here. And price will go up there and do business right there. And if you could line that up with a gamma level like I did right here at 756, this red line right here went all the way over. And that's why it came back up. Now you see here, this yellow line was in the book right here. This was another level. It had 172 buy orders right here, 172. So once we rejected out this gamma level, we was coming down here to transact at this level. I mean, hindsight's 2020. I didn't trade it because I just, it's Friday. And I already had got a good gold trade out doing the same concept overnight.
And you have all that liquidity everywhere. Oh
Yeah,
my God,
yeah,
this app
yeah.
is crazy.
Overnight, there was I don't know if I can find it now. I don't see it. This is, let me see, May 14th, okay, June 5th. There was a level. See it now. I mean, that's all I do is trade liquidity. Well, anyhow, there was a level in gold overnight, and it was like, I think it was this area right here, and it came up and it tagged it and it sold off. Yeah, it was here. This level here, and it came up and it tagged. There was liquidity sitting there. I can't see it now. I'm not gonna fight it, but maybe next time I can really show you Bookmap and show you how to line up. There's a lot of traders that's on Bookmap, that's on Spot Gamma. They're running them together. And all they're doing is trading these liquidity levels. They're finding out where the resting orders are, lining them up with open interest or call walls and call walls and put walls and GEX levels, and just trading from point A to point B. All you're trying to do is hit the liquidity levels. You know what I'm saying? You can see this one right here. Like this level here was sitting in the books. They come down, they got it. This level here, right here, you could have traded this level. It's been sitting there. This is 44.50 on gold. This was a put wall or something like that. Now, what's a put wall? Or what's this liquidity level? This is this buy order. This buy order could be somebody's stop. That could be all that is. That could be somebody's stop. That doesn't necessarily. You see what I'm saying? That could be somebody's stop. Okay? It doesn't have to necessarily be the put wall itself. The put wall might line up there, and there might be profit taking and people selling their puts, but it also could be people's stops. So that's what you see. A lot of these liquidity levels are people's stops sitting in the book, and that's why you see price come up. And all these red and green areas, these are absorptions and stuff like that. I wish I could show you this stuff in real time, but I missed it.
Nah, I know all about Bookmap, bro. This is so powerful. I had no idea you was using it. This is so powerful.
I've been digging in, man. I've been really digging in.
Oh, this app is crazy. They went off with this.
Yeah.
They did go off with this.
Yeah. So I mean, Bookmap. The thing I don't like about Bookmap, the community itself, they're all centered around Bookmap, and I should say I don't like it. I just, these people are getting scalping for 10 ticks and 15 ticks. I don't even want to be in the trade with 10 or 15 ticks. I'm trying to get 100 ticks, 200 ticks. You know what I'm saying? Like, I'm only trading 1 or 2 contracts at a time, so I'm trying to get 100. So I use this as just to verify that if a put wall I'm aiming for has liquidity at it. You know what I'm saying? Is that an area of interest? That's all I do is look at it. And I see if they're running stops. They got a stop indicator here and tell you if they're running stops. If they're running stops positive or negative, kind of tell you which way the price going. Icebergs don't really tell me a whole lot. The cumulative volume delta, tells us which way the price is trending. I've only been doing this for about 30 days now, so I'm still like, trying to figure it out, line a lot of this stuff up. So it's a work in progress. I know that we went to 4:30, so
You good?
I gave you guys as much as I got at the moment. So
That was amazing. That was amazing, bro.
all right. Hey,
appreciate
peace,
you.
everybody.
Amazing.
I just want to
everybody's saying the same thing. I was thinking about maybe in like 2 weeks do a poll, do a poll and just see if everyone's ready for a part 2, based off your schedule, because it sounds like you want to do a part 2, and that'd be super dope. They already said let's have you on again, and you're part of us anyway. So I don't want us to put too much on them though. So
look, I know, yeah, and I did. What'd you say?
You can go ahead.
Oh, I know that, and that's what I was kind of worried about, because I do have a whole lot going on, and I don't want to get above everybody's head, but I do want to show the people out there, the community, how institutions are looking at the market and trading, and that's what I'm trying to show everybody. I know it's a lot of tools, a lot of information, but they're looking at the mechanical nature of the market and underbelly of it. In addition to our chart reading skills, is where the next level of trading is. There's nothing else past this, I don't think. But this is how the quant desk and the research desk look at it. So, like I said, I don't plan on keeping these tools forever unless I start really doing good. I have made a lot more better decisions. I'm trading a whole lot less because I'm only looking for trades that make sense with GEX and liquidity now. So I'm gonna leave you guys with something somebody said. Eliminate randomness in your trades. If you can eliminate randomness in your trades. So, Talisha's really good about this. She's entering at, opening range breakouts. She has the 15-minute candle marked, and she's not entering until it retraces back into there and displaces away. So, intentional trading. I was a victim of a lot of people, trying to catch a breakout, and just making random trades, or you might not even think they're random. It's like, oh, this is the candle, and it's not the candle, But if you just eliminate randomness in your trades, random entries, random exits, and then go from there. That's what I'm trying to do. With that, I'm out.
Man,
Appreciate it.
I really
everybody.
appreciate you. And it's not
Thanks.
easy it's not easy talking for your first time, Virgil, for this long. Did really good. You didn't really lose. You didn't lose yourself. You kept everybody engaged. To keep somebody a normal person's attention span is about 15 minutes. You held us all on here for an hour, and I'm full. I gotta dodge. I gotta let this dodge.
I know. I figured I'm gonna confuse everybody. I have so much information.
You didn't confuse.
Like, when it comes on,
you didn't confuse it.
Too much information. So,
nah, you didn't confuse. At least I'm looking at the comments. You didn't confuse us. We're all full in a good way. Where like we already think about that next platter, but we're gonna take this in because I want us to move as like one. So I don't want nobody to get left behind. In about 2 weeks, 2 weeks, we can see where we're at. I'll see how your schedule look, and we asked everybody else how they're doing because they're going to be looking at this replay a lot. So we'll see where everybody's at and stuff, and then we could take it on from there. We could go into deeper with Charm and the other stuff and get into some actual live trades.
Yeah, I mean, that's all I was really wanting to do, is introduce people to the concepts. I wasn't trying to have anybody expectations that they were going to, that we're going to master this overnight. But I just want to introduce the concepts that's out there, how to do their hedges. Gamma is a good thing, but there's also Vanna and Charm, and and all the different tools that's out there and ways to see it. So maybe it's not for you right now at the moment, but maybe in a year from now or two, you say, "Oh yeah, I remember that," and you get into it. Just breaking the ice. And there's no expectations that you're going to become a master trader or you're going to learn all this, because it took me a month to get through Spot Gamma's teaching. They got, that's another thing valuable about it. They got a whole course that probably take you about a week to go through and just show you how to use Gamma and volatility and Vanna. You will learn a lot just even from a month subscription. Just going through it and understanding it, not that you got to use it for the rest of your life, but just understanding it, So, all right, y'all, I'm out. I appreciate it. Everybody's time. Listen to me go on about this stuff. So
we appreciate you. I just want to end it off with just one thing real quick before we go. I'm gonna go with me, then I'm gonna go into shock real quick. I love posting trades for y'all. It's not really for y'all, but it's like letting y'all see how I trade, and I trade many different areas like the UAA, y'all got to see like y'all didn't understand the play. Like Pat really didn't understand, and I made an article that had 0% IV, and I was
Wow.
telling them to bid at $2 when the spread was nowhere close to $2, but we was becoming the mark. But I'm just showing y'all new things and stuff like that. I didn't know none of this stuff. Like 2-3 years ago, none of this stuff, and I was frustrated. 3 years in April of 2022. About 4 years ago, I went on a losing streak that I'm always gonna talk about, and I wasn't profitable for 2 months straight, and I did not quit. When I first came into Patreon, Virgil was so confused, and they said he almost actually quit, but he stayed down, and he just stayed. This is what hard work and just staying down shows you.
Yep.
This is the outcome of it. Look how brilliant he is now. Like look how much he knows. And could you believe that about a year ago he was actually going to give up in the market? This is what hard work does, and just staying down. It's not going to be easy, but you just got to push through and just persevere. Just keep going and speak positive things to yourself, and just be with the right crowd. That's really important. Don't be careful with nothing's wrong with day trading, but there's everything wrong with day trading communities though. Stay away from those type of communities that's looking for quick money and stuff like that. Go into, you want to day trade, this is the perfect community, because you want to be in communities with straight, that's all about managing the risk. We don't care how many times we lose, because we understand that this game is a game of probability, and there's going to be lows and there's going to be highs. The whole thing is just being able to manage the risk. That's the only thing you are in control of in the market, your mind and your risk that you're managing. But I just really wanted to just give him his shout outs too, because we don't even notice how great we are until we hear it from another person. And he almost gave up, and look at this shit. He's teaching us stuff. Like, and I've been trained. I'm a fucking animal, and he's fucking he just opened so much. I feel like a new student that just came into the class in the middle of the year, you heard, and he just taught me so much. Just that's what staying down does. Like, just stay down, please. And it's the same with life. Do not give up. It's gonna get better for you. All you got to do is just stay down. God's gonna find a way for you if He sees you're serious and you really want to do better or be better. And I just had to give you your praise. Today was about praising the community and everyone that's blessing the communities. Y'all need the light too.
Can I ask Virgil a question, please?
Of course.
So it sounds like you work a lot and your time is only limited. So how much time do you put into that? What's your schedule like with work, adding work into it and making, working around your work schedule?
Well, for about, I don't know, I took it, like Ab said, for a moment there, I was ready to, give up on it. Not give up. I've always been a long-term investor. And I'm just going to try to give you a little background real quick. I've always been a long-term. I've been investing since 2005. I worked for myself, so I saved my 401k. And I tried options at one point, and a long time ago. And I said, this ain't for me. And I got into Patreon. And, I hit my first play, hit for $20,000 on ABGO play. I didn't even know it was earnings. I played it, and I made $20,000. And I was like, oh, yeah, and Palantir got me on the breaker structure, earnings, went down, sold off, all that stuff, and I was ready to give up. So I didn't give up at that point. I started studying harder, but started reading a lot. So I worked for myself. And all my free time, I would be reading or studying the market. Even now, I still do that. When I'm not working, I'm in one of my communities. I'm in multiple communities. I'm in the Patreon. I'm not sure how much longer I'm being there. My day's up. I'm gonna be, my year's up in a few days. I don't know if I'm gonna renew or not. I'm still deciding on that. I'm mainly in this community. I was in a community with Talisha for ICT, and I'm in the Spot Gamma community. And so I spent a lot of extra time looking at it. And the reason why is because the work I do, I'm an electrician, so it gets really cold out, and I run my own business, and sometimes it's difficult, taxes and all this, and I try to use a lot of the same analytical abilities that I do for electrical work, troubleshooting and stuff, and analyze the market the same way, and just really, it's a passion of mine because you know it's what you put into it. You know, I can get out of it what I put into it. Like my discipline and my patience is what's going to pay me. Is it always perfect? No, but it's getting better because I make better entries and better exits now. So, I mean, one of the ways I think to be a better trader is to be a better trader. If you stop taking so many losses, then you ain't worried about them as much. So, I can get in, I can get out in a day. And that day I know if I win or lose. And that's kind of how I operate. I spend a lot of time studying. I mean, but it's not like work for me. It's I like to do it. I don't know that it's not. I look forward to coming home and getting on the charts and looking at the gamma levels and figuring out which way the dealer is going to move and which way he's going to have to hedge. And when it works out, it's great. When it doesn't, I mean, you just control your risk. You know what I'm saying? So I think that's the main thing. Even for me, is not risking so much to where I can make rational decisions. When you risk too much, the losses get too big, the wins get too big, and your confidence either gets too big or too small. And so you're trying to stay even and work your way up, and maybe at some point I can build back. I took a lot of losses trading options. I made all my money I made fundamental investing. So I won't even just go off options. Like if I'm trading the stock, I'm gonna go dig in. I'm gonna go read the earnings report. I'll take the earnings report and download in ChatGPT and say, hey, what am I missing? What's this company's cash flows? Why are they losing money? You know what I'm saying? What's the positive? What's the negatives? You might could do that and go through, read some articles and stuff like that.
Yeah,
So
that's well. I'm still asking you too because of the time that it takes. I didn't know you were self-employed, but I'm self-employed, and maybe we should save it for a later conversation because that's where I'm struggling. Is how it sounds like you came from a long way to knowing what you know now. You put a lot of time and energy in it, and now that I know you're self-employed, how did you balance putting all that energy into the market and running your business and trying to make money, but still trying to, you get what I'm saying? Like,
yeah, I know what you said because I'm like, shoot, man. Right now, it's my business is not doing great. Like I've been
because we're
so much
putting more
energy
time
into it.
into the market. That's what I'm
Yeah,
feeling like. I'm spending more time on
yeah, I know. I
and I
know
don't want
that's
to hold everybody up because it sounds like it's getting more personal conversation, but
yeah, no,
that's what
I
I
mean,
was intrigued with, that you came
Good.
from so far. Everybody was telling you you've come so far, so so deep into what you know. How did you do that with the time that you
I
have?
mean, it's balance. Like
It's like,
I'll be out
damn.
of balance sometimes, but I was out of balance at work. I was working too
Yeah.
much at one point.
Yeah,
And,
well, yeah,
I'm
but
trying to
thank
move
you
on
for
to.
sharing, and I'm glad that you're doing so great at it. It sounds like we all have a lot to learn from you for sure.
Yeah, not from me, but from everybody. We all learning together. The reason why I present this information is to get more people eyes on it. And then they say, hey, Virgil, did you notice this or did you notice that? You know what I'm saying? So, like, one of the good things was like, me and Talisha, we was talking about what breakers. And she's like, open and range breakout, that's just a breaker. And I was like, oh my gosh, you're right. Like, and that light bulb, just having a conversation about different things, or me and Rams talk about volume anomaly candles and delta, cumulative volume candles and stuff like that, or just learning from everybody else. So um, yeah, but it didn't put me out of balance. I ain't
Yeah,
gonna lie. We're gonna see. I mean, I
yeah,
put
exactly.
everything I got into it. If it don't work, then it don't work. At least I tried. I ain't gonna go away and say, man, I didn't really try. That I know I gave my best effort into it. So
Thank you.
Exactly. And that was good. That was good. Just keep pushing and praying, EC. Cause
Yeah, I
I
know, man.
what do you
already
do,
know how that
DC?
shit is.
I own a custom frame shop. I've been doing it for 38 years and I have a huge clientele and all of that, but I'm not putting time and energy into it. And my business is suffering. People are waiting for their work because I'm in the stock market and I want to be here. And so then I try to go there after here. And yeah, anyway,
You custom what?
Custom framing. So I frame objects, wedding dresses, jerseys,
Oh,
diplomas,
yeah.
degrees, objects, paper,
I know
art,
it.
canvas, original art. I frame everything. And I love it and I do it, but this is where I want to be. I clearly, because this is where I am. And so now it's starting to come to a bottleneck where I'm going to have to really do something
Make a
with
decision.
a decision or come up with a strict schedule and really stick to it. But right now it's really unbalanced and I'm I'm at 3 a.m. looking at it, I'm looking at videos, but then the ADD's kicking in because now I'm bouncing and I'm looking at too many things. And
yeah, I know what you're saying. I think it's the learning curve is, it's steep.
So much and you want to learn
steep.
it all. I want to learn it all,
Yeah, me too. It's steep, but I think you will eventually get to a place where you're satisfied with your strategy. My whole thing was I was never quite satisfied with my strategy. I just knew there was a deeper layer. I wanted to see what that's where I'm at right here. I just want to see what's actually going on so I can make an informed decision and say, okay, I can do this or I can't do this. I got all the tools I need. Now, can I execute? And if I can't execute it, then I'm just go back to buying and holding. You know what I'm saying? If it's outside of what I can do, I'm gonna give it a good shot. I think you can give yourself grace, and work and trade smaller, and give yourself grace and room to grow.
Yeah.
You know what I'm saying? That's what I would think. That's how I don't think I'm gonna be where I need to be for another year. Much as I know, I still say, okay, I give myself another year before I say, I can't do it. But you keep going and you keep trying and you keep learning and applying. You're in the right place because Ab and Rams and Talisha, they best traders I know. They're not just jumping in stuff. They actually got a method, so.
Yeah, no, I definitely prayed for this group for real. I truly did. And it's just amazing how it all, came to this. I had no idea.
And what I like is that we have like similar paths. So I don't know if y'all know, but I'm a trader full time, but I wasn't always. In 2021, 2022, I had my own business, All Star Rides. I was doing a ride sharing company and stuff. And the same thing happened with me with the market. I didn't want to do that no more. I just wanted to be in the stock market. Long story short, I started putting in too much time in the market. Long story short, I lost my business and I had to go back to the warehouse. So I went into warehouse for 2 years but I just stayed committed with all 4 of my kids and everything. It's just about finding that balance. And then in the Patreon, I got fired from that job in the warehouse, and then I took all my money and I went all in to the market. And all praise due to Allah, I'm making more than I made at them warehouses and shit. And now I could do it's all about choosing your happiness. So you gotta choose your family. You gotta make sure you do it strategic. So I'm not telling you to you gotta be doing the strategic way. Make sure your family's good at the end of the day. Of course, you know that. But where we make our mistake at is like we die with that what if. What if I did this? Like, always choose your happiness over anything else, because if you have faith, God will find a way to put everything into place, into alignment, and He will bring whatever it is that you need, desire, or whatever to you. But it's all about your faith. If you have if you're questioning, like, man, might not go right, it's not going to go right. You just have to have complete faith and just give it to Him and just stay down. Always choose your happiness first. I promise you, choose your happiness and put God first. He will find a way to put in. It sounds so cliche because I say it all the time, but I'm just saying what just happened. This happened to me. Like, if I didn't witness it, if I wasn't a living testimony, I would never tell you something like that. because I know some people just say, but I've seen it happen. If you just, because I already know you're going through so much right now. This shit's a lot. But if you just choose your happiness and just have 100% confidence, or not even confidence, you don't have to have confidence in it. You can feel like it's dumb, but if you have 100% faith, he will find a way. I promise you, he'll find a way. Just don't choose depression over happiness. That's what most of us do. You don't seem like you're happy, so just stay down, keep doing what you're doing, try to find a way to manage your time, and don't quit what you're doing now. Keep doing your business.
Oh, I'm not gonna quit. Yeah, but that's the thing, the balance. I got to figure out the balance quick because it's starting to teeter one way, you know. And
I know.
And
I
I'm
already know.
I'm 38 years into it. I'm not gonna lose my business, right? So it's like I have to do something. So
you're gonna figure it out. That's where meditating at night and stuff come in, and then next thing you know, like a year later, something powerful is gonna happen. We don't never know the time. It's not like birth, but it's like birth. Instead, you don't know when the expected delivery is. But if you just stay committed and stuff, and you start manifesting these stuff, and just really having an open mind to how you can have anything you want, the pieces will always fall in line. We just never believe in the unseen. We always choose fear over faith. That's just the hardest part. And you're going to get the balance down. The time management thing is, a lot of us don't know how to manage time until we get to a point where you're at. It took me to get into that bottleneck. It took pressure in order for me to find that time. It took like me to lose almost everything for me to be like, nah, fuck, to really spike down on my mouthpiece and really go all in. And I had no choice but to manage my time, or my family was going to suffer. And I had babies at the time. And now they could tell you, like, they sit next to me every day, like, Daddy, you in the stock market? They get to see my live videos and all that. I used to come home with that green vest all sweated up and stuff, you heard, was just stressed. I was not at peace at all. Like, I hated my life. But yeah, just stay down. You're gonna figure it out, Nisha. I don't have the right words for you, but God got you though.
Amen.
Thank you.
Yeah.
Amen.
That was powerful. I'm glad that you opened up like that to us.
Well, it's just amazing that he's at this level of what he knows, you know, from where you were, and then going through that. So you clearly made a decision that learning it was going to be a priority, no matter what you have to go through. So,
but gotta choose your passion over almost everything. I always choose my happiness over everything. It's just that once you choose that path, just know that happiness path is the hardest, most rockiest path to walk through. That shit like real fire, for real. But anybody, whatever we want in life, we can achieve. We gotta really just believe in ourselves. Everybody says it, but nobody really truly believe in themselves enough because of how we was raised and stuff like that. But man, that's why it's so amazing to be around like-minded individuals and just work on our minds and stuff. It don't matter about age or nothing. I feel like I've been here like 10 lifetimes. But man, I really appreciate everybody for opening up. Every live we get somebody to open up, and I love it because it doesn't mean you're vulnerable. You're actually removing that toxic stuff out of you, so, and removing that stale energy, so fresh new energy could come in. You're killing your old self and
new wineskin.
Rebirth. Like, man, this is so powerful. Y'all don't understand, man. But that was amazing. If Ram, Talisha, if y'all don't got nothing else, I'll just end off with how I normally end off, and we go and enjoy our days.
Yeah.
Hold on, I just want to end off with one word, and it's pertaining to what Virgil went through. And because I saw the story, I saw it all. I was in the Patreon when I saw the Intelligent Investor book, and he made a picture with the trash can open, about to throw away. It was a funny thing. It was clever. You remember that day, Bird?
Yeah, I remember
that. Was clever. That was clever. And that's when you were like, man, forget this. So I'm going to leave y'all with one word, and that is consistency.
Yeah.
Oh, okay. And let me come back, and I'm going to leave you with one quick sentence. Time, you make time. Remember, time is made up. Time, we put those numbers. You gotta make the time you want for for that it is you say you want. So if you want something, you're gonna find the time. If you don't really want it that bad, you'll find time to not do it and do something else.
That's facts.
So you know what? Like instead of like if it's Instagram time, start flipping it. Yeah, you know what? Instead of being on Instagram, let me go and read about the gamma, or let me go rewatch this video about the stocks and what I'm missing or what I gotta work on. Oh, let me go chart my levels. If it's Netflix time, you know what? Nah. That hour that the show is gonna take, let me not watch the show today. Let me chart. So you gotta make the time for that it is you want.
That was real good.
Yeah, that's true.
Alicia, you got anything? I'm not sure if she's even
Nope, can't top that. That's good.
Perfect. And so yeah, all right. So I'll leave y'all off with: you don't have to know where you're headed. You just have to walk with grace. You don't have to know where you're headed. You just have to walk with grace. Because many of us don't start because we don't know where to start. Just start. Don't think about it and all. The only way you're going to know about it is if you actually start and then meditate on it. Then he'll put it into your head. I'm telling you, this stuff is so, we got to stop sleeping on the power of this God that I serve or you serve. It's so powerful. It will change your life. Many of us are religious, but we're not spiritual. You need to be spiritual. I'm telling y'all, change your life. But I leave everybody off with: would you rather be at war with yourself and at peace with the discord? Say, no, I'm playing. Would you rather be at war with yourself and at peace with the world? Or would you rather be at peace with the world and at war with yourself? The highest human act that we can achieve is to inspire and lift our brothers and sisters up. And other than that, serve each other. You know, I always tell y'all, just please smile. Make someone else smile if you don't want to smile, but you should smile because it's good for you. Smile, compliment somebody. If and be easy on yourself. Like if you still have some negative stuff, just notice that you have it. Don't hammer yourself, but do things to remove it from yourself. Like I had a thing talking about people because I was such a negative person. So then I was like, all right, I caught myself and I'd be like, now compliment them. You said something about them, now compliment them. And I'll keep doing it until I learn to not even say nothing negative about it, until I got that negative shit out of me. So I just be wanting to just build our minds together, man. Just seek knowledge and pass the knowledge, because you already know it's knowledge means to acquire information and put it to practice. So can't leave that shit sitting. I know many of us are gifted, and I'm loving to see everybody starting to break their shells. Gina, I pay attention to everything, Gina. Salute you, Queen, because I love that you're starting to send audio messages, and you're such a shy person. And I remember I remember everything y'all tell me. So I love that we're starting to find our comfort zone, our sweet spot, and I want this Discord to be so much more than just trading. I want it to actually have a spark on your minds, a touch on you. Like I want y'all to be like, damn, like this helped me in life, not even just trade. But I leave everybody off with peace be upon you. And in Arabic we say assalamu alaikum, peace to the gods, peace to the goddesses, peace, love, light, and heaven upon everybody. Have a blissful, fruitful day and weekend, and grind, man. Just keep grinding. No days off unless you feel like you need to recharge. That's it. Take care of your body and your mind. You only recharge when you need to. Have a blissful evening, y'all.
All right. Peace out.
Bye. Have a great night.
Yeah, bless everybody. All right.
Peace and blessings, everyone. Have a great weekend.
Yes.